This morning, ask not what your country cannot not do for you. The president goes all grammatical, seeks protection from left and right critics in the land of the double negative. Democrats speak. His base cannot not respond. It happened once before. We have no reply from Moscow. The dollar cannot not weaken. That's a double negative with an implied third. Yen goes through 113. And again, Powell, will testify. No double negatives allowed. And finally, Morgan Stanley, they report GAAP accounting does not allow double negatives. Taylor Riggs knows that, but Mr. Gorman cannot not adjust. Will he go all pro forma? Good morning, everyone. This is Bloomberg Surveillance. I'm Tom Keene in New York, and I cannot not introduce my colleague in London, in for Francine Lacroix, Nara Chayes. Nara, they didn't do this. I mean, you know, the Oxford comma, I mean, this is what it's come down to. We're going all grammatical in our politics and the way it folds over into the investment world.
Yeah, absolutely. And do you know what, Tom? I wish I could say I was surprised by the about face, but I'm just not. I'm really curious to find out exactly what could have driven it, but also what it means is going to happen from here, because there were so many implications from Helsinki when we discussed this yesterday. Well,
it will be interesting, and we'll have this across all of surveillance on radio and television today. Right now, with the immediate briefing, we cannot not go to Taylor Riggs. Here's First Word News.
Tom, Nara, President Trump has made a rare retreat from something he said. As you mentioned, the president says he accepts the conclusion by U.S. intelligence agencies that Russia interfered in the presidential election. That came after a backlash from Republicans over his remarks at his meeting with Vladimir Putin. Still, the president said that other people also could have meddled. There's likely to be more drama over Brexit today in Parliament for British Prime Minister Theresa May. May faces Prime Minister's questions, and her former Foreign Secretary Boris Johnson could signal whether he intends to challenge her. Plus, May's supporters are under fire for their tactics they used to win a narrow vote in Parliament on her Brexit plan. The European Commission will tell EU member countries they better be prepared for a no-deal Brexit. The London newspaper The Telegraph says a document urging countries to boost their Brexit contingency plans could be published tomorrow. That will be the day the UK's new Brexit negotiator, Dominic Raab, visits Brussels. And Google is about to set a dubious record. Bloomberg has learned that the European Union will fine the company about $5 billion over Android apps today. That's the most ever for an antitrust penalty. The fine will end an EU investigation into Google's contracts with smartphone manufacturers and telecom operators. Global news 24 hours a day on air and at TikTok, on Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Taylor Riggs. This is Bloomberg. Nara, Tom.
Taylor, thanks so much. Equities, bonds, currencies, commodities. There's some real market movement. We can give it to Chairman Powell off his testimony yesterday, but maybe other things going on as well. Equities flat. 2-10 spread. There we are, not near inversion, but a lot of talk. John Farrow really talking up the choice set of what happens at inversion yesterday. Euro gives way. That's the dollar strength. Let's move right on. There's an Abraj headline, very important. Good morning in Dubai this morning. Sterling under a 131. Oh, I missed that. Yeah, there it is. There we are. The 10-year yield has not moved. That's news. We've got currency move without yield move. Yen goes through 113.02. I cannot not do that. And gold further south this morning. Nara?
Tom, we are seeing a bit of movement in European equities. Their bid up some 0.5%. Car makers outperforming somewhat on what we're hearing about possible talks about tariffs between the US and EU. Let me pick up on cable here. I know you just showed it, but it's down 0.6%. Yes, part of that's dollar strength, but also we had that UK CPI data coming in a little soft, and yet more difficulties for Theresa May, even though she won that vote by a razor-thin margin. The 10-year bund yield not doing much, and Brent crude under pressure along with WTI, Tom.
Very good. Let me show a chart here. And I also want to explain here, this is dollar strength, and we're really up at resistance right now. This chart matters. It does. And, you know, we can make jokes about double negative, which is foundational to investment theory. I can't convey enough that where the president went yesterday with would and would not is the heart of what you hear by some of our esteemed guests, including the Nobel laureate Michael Spence, who's been brilliant on this as well. Here's the dollar strength up. We're right up at resistance, and you look at that moving average, just one moving average that describes a trend, and it's got a second derivative that screams stronger dollar. Nara?
Tom, the dollar driving everything, at least that's what my chart is suggesting to some degree. When we talk about US equities and how well they're doing, we've got to look under the hood just a little bit. This chart shows you that the strength of the dollar has meant that US companies with a large percentage of foreign sales have been underperforming those on the S&P 500 that are more focused on home revenue, US revenue exposure. Something to think about when we talk as well about the fact that the NASDAQ hit a fresh record high, Tom.
What we're going to do here is something different. First of all, we have Jim Hertling with us on the desk, and this is really in Jim Hertling's wheelhouse, all this uproar about the president's language. But I first want to bring it in Moscow. Let me show this if I could, Riley. I want to bring this up. Here's the New York Post going all Henry Meyer this morning with Mr. Trump. This is, again, the ownership of Mr. Murdoch and the Sun in that acclaimed article of a week ago or so. And for those of you on radio, it's two faces of Mr. Trump. And at the bottom, not whoops, but whoopski, which is a nice way to go to Moscow, Russia, as well, with Henry Meyer, our senior government reporter. Henry, is there any response so far from Mr. Putin on the walk back from the President of the United States?
No, there hasn't been. I mean, as we know, the Russians were cock-a-hoop after the summit ended. At least all the top officials, including Putin himself, in an interview he gave to Fox News, they all judged it a huge success. But even before Trump walked back on his comments, there was already, some understanding here that, in fact, Trump probably miscalculated, and by provoking this huge backlash in the U.S., may have actually made it much harder to achieve this rapprochement, easing of tensions that Russia so desperately wants.
Just fascinating, Henry. I guess just to keep it short as we go to Mr. Hertling today. And Neera, I want you to jump in here with Henry Meyer as well. Henry, what is the next step for Mr. Putin? I think we're all watching Mr. Trump step by step, inch by inch. What's the next thing that Mr. Putin does?
Well, I mean, they're going to try and nail down some of the areas they agreed to work on. I think that's how the Russians see they got to move forward. That's arms control, that's Syria. Those are two areas where they could actually make some progress. So, Russia hasn't given up hope entirely that this is going to work out, but obviously hopes have been very much deflated.
Henry, that said, did President Trump do the right thing in not talking President Putin down as he was standing next to him in front of the global media?
Well, I've spoken to people here in Moscow who are close to the Kremlin, and they actually say that yes, it was a mistake of Trump to side publicly with Putin on the issue of election interference. That this has just inflamed the situation. So there is a recognition here that Trump miscalculated.
Henry Meyer, thank you so much. Greatly appreciate on short notice this morning the follow-up from Moscow. Let me do a morning must-read right now. There's a zillion stuff out there. I'm sure there'll be published more today. Matt Flegenheimer nails it in the New York Times, blending Jim Hertling's English into what Mr. Trump was talking about. And through the surveillance this morning, I will go into this. Would it or wouldn't it be Russia? Trump goes double negative. And just some of the highlights, like confusing effect and effect. We all know that. I still don't get that one right, Jim. Clinton once wondered what the meaning of the word is as he strained to weather Ms. Lewinsky. Clarity was elusive. This for all presidents. He mentions younger George Bush. Ask not what your country cannot not do for you. And then he goes on to Reagan's clarity and says, Mr. Gorbachev, don't not tear this, I can't even get it out. Don't not tear down this wall. With us, the gentleman with the best English chops I know at Bloomberg News, Jim Hertling. Jim, I thought we'd never talk about this in our life. Jim Hertling, what's a double negative, and how did the president do yesterday walking this back?
Tom, it's interesting that they found an excuse, I guess. They found a rationale. Because what he's done is he's effectively given political cover to all of those Republicans who want to somehow, stop criticizing him. The interesting thing is You know, he was very clearly on script. He changed his tonality. When he read that statement, he made it very clear that he was reading a script. And, you know, when he was done reading it, he made it very clear that he was, you know, speaking extemporaneously again. And you saw it again in the Fox News interviews that he gave both to Sean Hannity and Tucker Carlson. It really makes you question, you know, what was behind the walk back. And I dare say, you know, you had senators saying they're able to now say, we believe him, we take him at his word, that he misspoke. Whether he feels that way, and notice the headlines were, you know, he wrote in black Sharpie on his script, you know, there was no collusion. Yeah. So.
Well, that brings me to our next question. In terms of all the criticism we saw yesterday, is that just going to go up in thin air now from his own party?
If past his prologue, yeah. Yeah, I mean, even, you know, Paul Ryan and Mitch McConnell, they made comments about Russia, Russian meddling, Russian interference, not a word about President Trump's performance standing alongside Vladimir Putin.
Jim Hertling, thank you so much. We'll go grammatical through the week and pay homage to Mr. Hertling's abilities as we can as well. Coming up from Finland, whoa, we had a wonderful time in Finland, a beautiful Helsinki. Alexander Stubb will join us with the European Investment Bank, their vice president, former Finnish prime minister. Good to catch up with him after the joy that Francine Lacroix and I had in Helsinki. Please stay with us. Neera Chayich and Tom Keene. This is Bloomberg.
多様な世界の捉え方、見方があるっていうことを、示してくれる。で、これまでの既成概念を壊して新しい世界を感覚として表現することができる。それが僕にとってのアートでありテクノロジーなんじゃないかなというふうに思います。その動くものっていうのがすごく、好きというか気になるんですね。動きと時間っていうのはすごい強い関係性で結ばれているっていうことは、見えない時間っていうのをどう見せて、どう視覚化して、どう継承化してっていうことを考えた時に、やっぱそこでテクノロジーを使えばそこにある時間をまず、見せることができる。そして 3D プリンターを使えばそれを実体化できるっていうことに気づいて、今の作品につながってます。
Hyundai Motor, connecting art and technology. At Fidelity, our online U.S. equity trades are just $4.95. So no matter what you trade or where you trade, you'll only pay $4.95. Fidelity, open an account today.
It can power your apps with public services without starting from scratch. It brings your business up to speed, doing more with systems you have in place. It can bring all your apps to life and run them within your data center. It is the IBM Cloud Private. The cloud that's built for all your apps. AI ready, secure to the core. The IBM Cloud is the cloud for smarter business.
This is Bloomberg Surveillance. I'm Taylor Riggs. Let's get the Bloomberg Business Flash. Billionaire Elon Musk has apologized to a British diver for remarks that briefly appeared to rattle investors in Tesla. Musk tweeted that he was sorry for referring to Vern Unsworth as a pedophile. Unsworth was one of the divers who rescued boys' soccer team from a flooded cave in Thailand. He had criticized Musk and the mini submarine he built to help in the rescue. And a shakeup at Texas Instruments. CEO Brian Kutcher is out after less than 2 months on the job. The company says he violated their code of conduct relating to personal behavior. Former Texas Instruments CEO Rich Templeton will resume the role on a permanent basis. And Steve Ballmer became famous for his high-energy performances while he was CEO at Microsoft. The billionaire hasn't changed now that he owns the NBA's Los Angeles Clippers. Ballmer is this week's guest on the David Rubenstein Show Peer-to-Peer Conversations.
I yell and scream. I've become a little more moderate, so I preserve my vocal cords because it certainly can be a problem when you're, yeah, let's go, let's get these guys, yeah, it can be an issue.
And you can watch the entire interview with Steve Ballmer on the David Rubenstein Show. That's at 9 p.m. New York time here on Bloomberg TV. And that's your Bloomberg Business Flash. Tom, Naira.
Thanks so much, Taylor. Now, the Fed is planning to raise interest rates gradually for now. Those were the two key words taken from Jerome Powell's testimony to the Senate Banking Committee yesterday.
With a strong job market, inflation close to our objective, and the risks to the outlook roughly balanced, the FOMC believes that, for now, the best way forward is to keep gradually raising the federal funds rate.
The dollar advanced after Powell spoke, though this was based more on an upbeat assessment on the U.S. economy. Joining us now is David Bloom, HSBC Global Head of Currency Strategy. David, good to see you.
How you doing?
Dollar gaining again today against most G10. What was dollar bullish about what Jerome Powell said yesterday?
Everything. Oh, come on, he's going to raise rates.
You're a dollar bear, right?
Yeah, you could get hurt on the show. No, what's he doing? He's doing what he's always been doing. People thought, oh, the yield curve going negative, the Fed's going to worry, they're going to pull away. So it's all those dovish people were giving us all that spiel, and he went, nah, the economy's doing well, I'm raising rates for now. Well, I only care about now. What about tomorrow? So, of course, it's bullish, the dollar. But this is a benevolent dollar move because dollar yen went up. So this is the dollar, this is interest rates, this is the U.S. economy. The dollar can also rally because of trade wars and horrible things going on. So this is a positive dollar rally.
Why do you think that not everybody is buying your assessment of further dollar strength?
Because they like losing money. There are people out there that... no, I'm only kidding. Look, there are people that obviously that's what makes a market. They have the opposite view. But my view has been for several months now, the US raising rates, the US economy is doing well, and the rest of the world is faltering. I mean, we're talking the ECB is September next year. The Bank of England is saying one and done. And even now, after the CPI numbers, people are going, well, maybe not. Where are all those countries that were normalising? They're not there. I get paid a lot of money to own US rates, and the world out there looks nasty. And in dollars, I can pick up on the short end with no duration risk. It's beautiful.
David, what is your call at HSBC on dollar yen? Give me a direction and a size of move. How many big figures does yen move which way?
OK, it's an interesting question because our dollar yen move is that nothing. I'm not interested in dollar yen, but it's my golden compass.
Yes,
why is it my golden compass?
I'm going to steal that. I love that. That's brilliant.
It's the golden
David
compass.
Bloom, the golden compass. Yes.
So it's a golden compass because when dollar yen is rising like it is now and the dollar's rallying, that's a benevolent move. The US economy is doing well and equities are doing OK. Bonds aren't really moving. That's beautiful. When dollar yen's heading down, that could be a trade war. That could be something nasty out there. And then the dollar's rallying. So dollar yen tells you what kind of dollar rally you're getting. But if you believe in the dollar like me, you don't care which kind of dollar rally it is. But dollar yen could move up, but could move down. So we got dollar yen flat at 110. And if I'm buying the dollar, I'm buying it practically against anything, but I'm just using the yen as my golden compass. I'm not using it to trade with.
What about real rates, David? That surely doesn't feed into being dollar positive.
Why not? Why not? I mean, the US, don't forget, we've come from very negative real rates and we're coming all the way to positive real rates. If you're a millennial and you're sitting there on the trading floor, you ain't seen these rates in your life before. You go, whoa, I can get paid for owning dollars. I didn't know that was allowed. It's beautiful. No duration risk. I don't have to wait 10 years with 20 coupon payments and listen to Steve Major all day. I can just buy the dollar. It's fantastic.
David, within this is I got to make money, or to go to the double negative of the moment from the president in the famous type 2 construct, I cannot not lose money. When you go to your trading desk right now, is it about making alpha, or is it the classic type 2 construct, I cannot not take risk, I'm afraid I'm going to lose money? Which way is that?
I think it's a bit of both. I think flat is the, people are worried, as you say, about losing, so risk aversion is still everywhere. But you still got to make money if you want to be in financial markets. You can't be scared of everything. So I think if you buy the dollar practically across the board, G10, EM space, there are a few exceptions, I really think that's the way to go. You can pick up beautiful rates in the US without duration risk. It's great. And just to quote Pink Floyd, we don't need no education. So double negatives are not new.
Just final question, David. Is the trade in the dollar getting too one-sided now that actually, I understand that you're dollar bullish and I understand why, but you're going to feel a lot of pain if it goes the other way?
No, because I think people are fighting me every step of the way. So it's not like I'm dollar bullish and you go into a meeting, everyone goes, yeah, high-fiving. I mean, you get put in the mincer. So people aren't really believing. And then when you look at the IMM data on the long positions of dollar, people aren't that long. They've gone from being very long euros to flattish, maybe a little bit positive dollar. But if we were sitting here and everyone was dollar bullish and the IMM was dollar bullish and everything was going, then you could have that to say against me. But at the moment, resistance is good.
Resistance is good, says David Bloom of HSBC. He stays with us. And coming up, Tobias Levkovich, City Chief US Equity Strategist. That's at 6:30 a.m. in New York, 11:30 in London. This is Bloomberg.
What would you call a drug that brings hope to millions? Encouraging, promising, inspiring. What would you name it? That's Brand Institute's job. Learn more at brandinstitute.com, where great brands begin.
I'm a small business, but I have big dreams
and big plans.
So how can I make the efforts of eight employees
feel like 50?
How can I share new plans virtually?
How can I download an e-file?
Virtual tours,
zip file, really big files.
In seconds, not minutes.
Just like that.
Like everything?
The answer is simple.
I'll do what I've always done.
Dream more?
Dream faster. And above all?
Now?
I'll dream gig.
Now more businesses in more places can afford to dream gig. Comcast, building America's largest gig speed network.
Investment world is full of complex and expensive products. At Sector Spiders, we recognize the need for lower costs, more clarity, and greater focus. So we wrote a new chapter for today's investors. Sector Spider ETFs divide the S&P 500 into 11 distinct sectors. You can see exactly what you're investing in with full transparency. Each sector has the diversification of a mutual fund, the flexibility to tailor your investment strategy, the all-day tradability of a stock, and the tracking of an index. Sector Spider ETFs can be used to customize your portfolio allocations, overweight or underweight your sector exposure, and minimize single stock risk. Now it's time to turn the page to a clearer, more focused approach. Sector Spider.
Would this be easy for Google to absorb?
Totally. Now, I mean, $5 billion worth, which is what 4.3 billion euros is but a drop in the ocean of cash for Google. Remember, they've got more than $100 billion that they can spend that's in short-term investments in cash, according to their last balance sheet. However, this is a big symbol. $5 billion is a record amount. It's more than 50% more than they had to pay out in their previous fine that they got related to the shopping efforts of Google that was laid out last year. So this really is yet another shot across the bow coming from the EU overall, Tom, but of course they can pay it.
Caroline, you and I talked about this in London when I was there weeks ago, and the basic idea, Caroline, is Europe really cares about this, and nobody in America cares. Why is that? Why is this like a huge deal in Europe, and everybody in America is going, what?
Well, I think the EU regulators care so much more. They're worried about the monopoly effects that some of the key tech titans such as Google, Facebook, Amazon have. Remember, it's got about 80% of Android in is market share in phones installed at the moment. Smartphones around the world. You've got 90% ownership of Google search in terms of all search engines. This is why the EU regulators care. But the question is whether or not they can affect change. Will the business model of Google change? Will they have to stop being able to bundle up the likes of Google search with your Android phone? Well, therefore, we get more market share for Bing or for the other rival app developers. That's what's happened in Russia. Interestingly, we did see a change in Russia. You did see Yandex start to increase its market share.
Bloomberg's Caroline Hyde for us in Brussels. Thank you so much. David Bloom of HSBC stays with us. And coming up, the European Commission's Competition Commissioner Margrethe Vestager on Google. This is Bloomberg.
Angie's List has collected millions of...
I'm Naira Chahich in London. Tom Keane is in New York. Now let's check in on what's trending across the Bloomberg universe. On TikTok, Trump backtracks on comments in Helsinki, saying he accepts the conclusion of U.S. intelligence agencies that Russia meddled in the U.S. election. Head to Twitter for more on double negatives. On Bloomberg.com, Theresa May has seen off a bid by Conservative rebels to create a customs union with the EU if a trade deal fails. The government won by only 6 votes. And our most read stories on the Bloomberg terminal over the past few hours. In third place, analysts from Templeton and BlackRock say now is the time to buy emerging markets. In second, former Fed officials Ben Bernanke and Timothy Geithner voiced concerns about the next financial crisis, and Goldman Sachs surprises by setting aside an unusually small portion of revenue to reward traders and bankers. Now let's get the Bloomberg First Word News. Here's Taylor Riggs. Taylor.
Naira, Tom, President Trump now says he accepts that Russia meddled in the presidential election, but he didn't sound completely sold. The president backtracked from his comments at his meeting with Vladimir Putin after a backlash from Republicans. But he introduced some doubt into the issue. The president added that other people could also have meddled. The Trump administration is opening an investigation that could lead to tariffs on imported uranium. Bloomberg has learned that the administration will determine whether those imports harm national security. The American uranium industry wants to be shielded from competition from state-owned companies in countries including Russia and Kazakhstan. As you were mentioning, Naira, several big names from the war on the last financial crisis are concerned about America's ability to fight another one. Ben Bernanke, Tim Geithner, and Henry Paulson all played prominent roles fighting the last one. Former Treasury Secretary Geithner said there are probably too many constraints to counter an extreme crisis. And former Fed Chairman Ben Bernanke criticized the tax cuts as ill-timed. And billionaire Jeff Bezos plans to launch another rocket today. His company, Blue Origin, says the New Shepard rocket will be carrying a number of science and education experiments for microgravity research. This is Blue Origin's 9th mission. Bezos hopes to eventually send tourists into suborbital space. And you can watch the launch here at Bloomberg, 10 p.m. Eastern. Global news 24 hours a day on air and at TikTok on Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Taylor Riggs. This is Bloomberg. Naira, Tom.
Taylor, thanks so much. The risk here, folks, is to go all politics. The news flow is original and extraordinary. We saw that from NATO to the United Kingdom, a little bit of Gulf and Scotland, and on up to Finland, and then the furtherance of it just to the last 24 hours. There are still arguments of trade. They fold into what we do at Bloomberg and, of course, into our politics. We are honored to bring in Marianne Schneider-Petzinger, Chatham House, focused on the geoeconomics of the moment, and also David Bloom with us with his decades of work and really thoughtful books with HSBC as well. Marianne, let me begin with you. The simple use here is unilateral, bilateral, multilateral. What's the future of trade?
I think President Trump has made it very clear that he's interested very much in bilateral agreements, so striking deals one by one. There is obviously the question whether there is still room for negotiation with the European Union, because technically that is a bilateral deal. But the Trump administration has also made it very clear that they don't see it as such, that they view it as a multilateral deal in a bilateral dress. So, again, the future very much, I think, open. On the other hand, we are seeing other countries moving ahead. The European Union just negotiated a trade deal with Japan. They're interested in striking trade deals with Australia and New Zealand. And also, interestingly enough, this week, the remaining 11 countries of the Trans-Pacific Partnership are meeting to expand and discuss whether to bring in other countries into the agreement.
Okay, Marianne, I'm just an ugly American, and of course I go Merkel, 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 Macron, more Merkel, 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 let's talk May, Macron, Merkel, May, and I'm wrong. There's a whole nother Europe out there. Can Finland or Poland or Portugal, can they go bilateral? I don't understand that. Don't they must have a multilateral trade discussion?
Well, obviously, you know, the European Commission and the European Union has authority to strike trade deals, and that is the single competency that they have. However, that doesn't mean that individual countries of the European Union can't have those talks with the United States and try to, you know, explain how EU trade policy is conducted It's also very interesting that next week, the European Commission President, Juncker, will be traveling to Washington, D.C. to meet with the president. And then obviously there, the big question is what is going to be on the agenda on trade. Will it be mostly about the steel and aluminum tariffs that have been implemented and where the European Union has retaliated? Or is it very much also looking at the looming tariffs? Because the Trump administration is currently conducting an investigation into whether there's going to be tariffs on the imports of cars and automotive parts. And that would have huge political but also economic implications.
Marianne, trade came up in the questions to Jerome Powell yesterday. Surprise, surprise. My question to you is, what would it take for the trade war to meaningfully affect the U.S. economy?
Well, so what we're seeing right now is that we're not really actually seeing it play out in the macroeconomic indicators. And there is obviously the question of, is there going to be a tipping point? For the time being, what we've seen from the tax cuts and the tax reform, those economic, the positive economic benefits are still dominating it. The other question is also, to what extent will business finally speak up and stand up to Trump on trade? And will also Republicans take a stance on this? For the time being, they have only taken baby steps. They've introduced legislation and last week also passed a non-binding motion to rein in the president on Trump with regards to those tariffs that he's introduced in the name of national security. But really, the Republicans, for the time being, are not standing up because they know that Republican voters are actually more on board with Trump on trade than they are with the traditional free trade Republican orthodoxy.
David Bloom, is the dollar the ultimate safe haven currency if we get the all-out trade war?
No, that's what I was saying. It's, I think it's the yen. So the yen beats the dollar beats the euro beats the others. You want to be buying big closed economies, not small open economies. And so that's why I was saying earlier with Tom that the golden compass is dollar yen, where at the moment we're seeing the dollar rally because Powell's spoken, interest rates are going up, the US economy is doing well, dollar yen goes up. If we start talking about this being the main driver in FX markets, then the yen does very well against the dollar yen goes down, but then the dollar's rising against the euro's rising against others. It's a different type of dollar move. And the way you tell which type of dollar move it is, you look to dollar yen.
So this dollar move right now, go for it, Tom.
No, please, Nehru, no, go ahead, please. I interrupted. It's a jet lag.
Please don't argue.
No, Nehru, please.
Really?
I argue.
Look, a few weeks ago, I asked you, do you buy the dollar against every currency except the yen when there's this trade war situation, right? Now we're seeing the dollar strengthening against the yen. So is this telling you that the dollar move is about US fundamentals?
That's right. So last night, you've got interest rates, you've got talk of the Fed, equity markets are doing quite well, bonds are not getting hurt. This is telling me, this is about the US economy. This is about rates. This is not about trade. If dollar yen was going down and equities were under pressure, it would be a very different risk-off type of dollar move. And as I said, the thing I hold in my hand to look at, that golden compass, is dollar yen. That's why I don't want to trade it. I like the dollar, but there's one currency I can lose one side and win the other. I want to win on both sides.
David, within this is the HSBC call of your work with Steve Majors, the 30-year bond 2.97. Steve Major looks real smart right now. Do you guys sustain, I mean, if we're in a bilateral world and all this trade malarkey, do you guys sustain low yields still?
Yeah, I mean, sure. I mean, what are you going to do? If there's a trade war, you'll go in a trade war type environment. You'll go risk off. You'll be buying the dollar. You'll be buying treasuries. I mean, what are you going to buy? And so that's what we're saying. So that's a winner as well, not for the world, but for those two assets. But obviously, it has its impact on global growth, which is negative.
Marianne, are we just talking here about mercantilism and maybe neo-mercantilism and maybe double negative mercantilism? I don't know what it is. But is really what we're talking about here is a more mercantilistic world?
It is. And again, the Trump administration has also made it very clear that it's a zero-sum world. So one wins, one loses. And the question is, to what extent that is just overblown on other fronts. So I do think that the Trump administration has pointed to some very valid concerns when it comes to trade, particularly with regards to China, intellectual property rights, forced technology transfer. I mean, those are real issues, but it doesn't really get touched upon. And what we're seeing is that the Trump administration is putting allies to the side. The European Union, for example, now with those tariffs that are imposed and the looming tariffs, even though there is a real opportunity here to work together between the European Union and the United States to confront China on some of those practices. But again, it's not really done. What we're seeing play out is that actually the Europeans and the Chinese are now working together at the WTO.
Where does this all end then? Does it end with less trade globally, or just that trade is kind of reshuffled?
Well, the real question here is what are the implications on global supply chains? Because, trade isn't really just a kind of like import-exports, it's across borders. And it's in this environment of uncertainty that it's really, really tricky also for businesses to make any kind of decisions. In terms of the economic implications, the IMF just on Monday published their estimates that this could spiral out of control, that we're seeing a downturn of 0.5% hitting GDP by 2020. So there could be negative consequences. But also, as the Fed chairman said yesterday in his testimony before Congress, it is really tough to kind of see how this is going to play out and predict what the economy is going to respond to.
Yeah, and also when I see those predictions about hits to global growth, we're talking 0.4%, 0.5%. I mean, how meaningful is that actually? Is it something that markets should really be concerned about?
Well, I think to some extent they have priced it in, and the real question is the impact of the uncertainty. Also, with regards to the tariffs that we've seen imposed so far, that's quite minor. The question about what is going to happen about the looming tariffs, that is again down the road a larger question, and that could really have then economic implications. But because we don't quite know if it is going to spiral out of control or whether there is still an open path of negotiation where at any point we could kind of de-escalate the tensions, we don't quite know. But it is, again, uncertainty. That's the key point here.
Mm-hmm.
This has been wonderful. Marianne Schneider-Petzinger, thank you so much. With Chatham House, David Bloom of HSBC with us this morning as well. This is a wonderful function. I got a lot of buzz on this in London, even up in Finland from terminal users in Helsinki. GTV Go, Graph TV Go. You're at HSBC, you're an intern in London, and you got an 11 a.m. or a 2 p.m. with David Bloom, and you're nervous. Steal my log DXY chart. Anthony, that's in the upper left corner. The gorgiosity of DXY, CURNCY, GPL Go. There it is. Dazzle David Bloom at HSBC. You can steal it at GTV Go.
I'm Naira Chehich in London with Tom Keane in New York. Now, the UK Prime Minister has fended off an attempt by pro-European Conservative rebels to keep open the option of Britain entering into a customs union with the EU after Brexit. Let's take a look at what the papers across the UK are saying. In the Financial Times, Theresa May restores her frail grip on Brexit by seeing off pro-EU rebels last night to win a crunch vote. In the Times, Tory whips issued a warning to Remain backing MPs that they might face a summer general election if they defeated the Prime Minister's plans on a Brexit customs union. And in the Scotsman, there's a call for a rerun of the EU referendum as vote leave was referred to the police following an official investigation that concluded that it breached spending limits. Today, the Prime Minister gives evidence to the Liaison Committee, which will question her about issues ranging from Brexit to changes in her government. Let's get back to David Bloom, HSBC Global Head of Currency Strategy. David, dollar bull, you've been a sterling bear.
Yeah.
We keep getting all this political noise, just the latest over this customs bill now. Does sterling have much further to fall from here?
Well, we haven't got it falling that much from here. I mean, our forecast is 130, and I'll tell you, when it was 143, I was sweating. Let me tell you something. I was under massive pressure. You know, there it was going to be a soft Brexit. The Bank of England was going to be raising rates, and everything was looking more relaxed. And now it's kind of, you see the inflation numbers today. We've gone from 1 and done to 2 and through. The Bank of England's going to do maybe one more and then end. And now we've got this political situation that remains very messy. So on what basis sterling should be cheap to fair value? And it is.
Right.
So perfectly happy with our forecast still.
OK, but given that you're a dollar bull, and so we could get sort of downward pressure on sterling just because of dollar strength,
sure,
and the fact I question whether the market at where sterling is right now, 130.34, is really pricing the worst-case scenario.
Well, we can't be, because we don't know what the answer is. I mean, 2 weeks ago, we were pricing in a different scenario, which looked like a softer Brexit. So if you imagine a binomial distribution, the softer Brexit got bigger and the hard Brexit got smaller, and now it's flipping around the other way. So it's all over the place, and people just not quite sure what to do with it. So you don't know this outcome, and the delta is dripping away as time. Your TikTok on your Bloomberg, well, we've got a date.
Well,
you know, it's next year.
I just love this, folks. I mean, to go Greek letters with David Bloom is just great. That's right where I wanted to go, David, is the X-axis. Prime Minister May's X-axis is different than Labour, Tory, and all the other shades here. What's the city's X-axis?
Well, and there's two big things we worried about, or must be concerned about with sterling. One is the interest rates, what's going on there, and should they be raising rates or not? We think they will raise rates. Should they be raising rates? Not quite sure. And the other is we've got a timing. We chose a date. We've got an end date. It's not like all currencies are a probability of a distribution of all different events with no end. This has an end. So which is it? And so the sterling goes, well, I don't know which one it is. So we feel it's a bit way up, but there. So it moves a little bit. But at some point in time, we could get a big move if we think something dramatic is going to happen. Either a customs union or a no deal. Which one is it? Well, we're hoping very much it's a softer Brexit for sterling's sake.
David, volatility in sterling and euro sterling has been subdued even through all this. I just want to draw your attention. I'm sure you've seen it. Euro sterling trading at 89.18. It's been between that 87 and 89 range since April. It's broken out of that now. Is there further upside, therefore, to euro sterling?
Well, the range is quite tight at the moment, but I think sterling's done some of the move recently, but euro's playing a bit of catch-up. So, yeah, we've got it really staying in that range. I mean, we've got euro going back to 113 or so, and cable's nearly there. So we could get a bit of a turnaround. But as I said earlier, to break that range, to get that burst through, we've got to hear a slam dunk piece of news that we're hearing it's one way or the other. And at the moment, we're just vacillating from hard to soft, soft to hard, and we're not quite sure. So volatility is subdued because you don't know which one it is. So you can't put all your eggs in the one side or the other side. So which one? Yeah. 2 weeks ago, soft. It's going to be soft. Now it's, could it be hard? And so you get tired of it, and people just go, right, OK, lower volatility, sterling roughly between 130 and 134.
My goodness, Brexit tiring David Bloom out, Tom. It takes a lot to tire out David.
The president didn't go to David at the Checkers press conference. We know that for sure. David Bloom of HSBC with us here with yen weakness to 113 and new renminbi weakness as well. Bloomberg Radio coast to coast. Robert Moon, Karen Moscow. Good morning, 106.1 FM Boston, 99.1 FM Washington. Bloomberg Bloomberg 1130 in New York, San Francisco, Sirius XM, Channel 119. Bloomberg Daybreak on radio.
This is Bloomberg Surveillance. I'm Taylor Riggs. Let's get the Bloomberg Business Flash. Hedge fund York Capital Management is the latest. Join the race to buy the asset management platform of Dubai private equity firm Abraj Group. Bloomberg has learned that York is offering $45 million for the platform. Abraj is currently under a court-ordered liquidation. The turnaround is starting to take hold at Ericsson. North American sales rose 11% for the Swedish maker of wireless networks. And for a second straight quarter, a key measure of Ericsson's profitability improved at a faster pace than analysts estimated. And Bloomberg has learned that the government has given Boeing a $3.9 billion contract to keep developing 2 new planes to serve as Air Force One. That caps off a contentious battle with President Trump over costs. The Boeing 747s would be delivered in December of 2024, and that would be the president's last year in office if he wins a second term. And that's your Bloomberg Business Flash. Naira, Tom.
Taylor, thank you so much. We are advantaged with HSBC, the Hong Kong and Shanghai Banking Corporation, David Bloom on foreign exchange. And David, we've got to talk about the Pacific Rim, EM. I know you want to go to Turkey and ZAR here in a moment, but let me look at ADXY. Bring up the chart here, Jamila, if you would. I'm sorry, folks. Teach a course on trend analysis, and this is to die for. If I was lecturing at HSBC on trend, this is absolutely mint right there. And then we've got a secondary trend here, David, that is just weaker, weaker, weaker Pacific Rim currencies on ADXY. Do we sustain that?
I think that, yeah, they will weaken, but not to the kind of point they've been weakening. I think the weakening could be more severe elsewhere, but we certainly are looking for the dollar to be king. But renminbi's now gone through 670, and they try to draw a line in the sand there. So we're watching that level quite carefully. That's our forecast for the end of the year. So over that, we'd get a little bit, start getting a bit nervous. But yeah, the dollar's winning everywhere. You can shop any chart of the dollar you like. It'll show the same thing, Tom. It's a winner.
David, who is King Dollar going to crush most in the EM space?
well, there are quite a few that have problems, and we think, like, for example, the Rand, you know, it rallied very hard on Ramaphosa. We call it Ramaphosa winning. People getting very optimistic politically. That's kind of starting to wane, and cyclically the economy's looking a bit poor. Structurally, got a fiscal situation that's not great, and politically it's a bit overdone. So dollar Rand higher, if you like, dollar Brazil. Sport for choice here. Dollar Turkey.
Now, on Turkey specifically, one of the last times we spoke, not that long ago, you were quite bullish on the lira. You've pulled back now. Why?
Yeah, because we thought after the election that a more sustainable policy framework would be in place, and we're not seeing it. So if the facts change, we change. So we thought it could hold at about 440. Now we don't believe that. We think the inflation, central bank reluctance to raise rates, the idea of not having a more sustained policy framework after the election, I'm afraid we've thrown in the towel on that one.
David Bloom, flexible and nimble.
That's right, Neera. Keep talking, Neera, because I'm bringing up a presidential treat, which we just got out. Priya Misra is going to join us in the next hour. There we go. And I'm trying to get up for you right now. We try to do this at Bloomberg as quick as we can. A presidential tweet. We'll feature this in the next hour with our Kevin Cirilli. So many people at the higher ends of intelligence. We thank David Bloom for bringing us higher ends of intelligence on foreign exchange today. Much, much more to talk about here. Yes, the politics of Washington. We're in search of Mr. Cirilli flying back from Europe. We'll also drive forward the conversation on economics, finance, investment, and yes, the tumultuous times of international relations that we see. Priya Misra in our next hour. Stay with us, Neera Chayich and Tom Keene. This is Bloomberg. Ask not what your country cannot do for you. The president goes all grammatical and seeks protection from the left and right critics in the land of the double negative. Democrats speak. His base cannot not respond. It happened once before. No reply from Moscow. The dollar cannot not weaken. That's a double negative with an implied third. Yen to 113. Again, Chairman Powell will testify. No double negatives allowed from the Fed. In Morgan Stanley reports, GAAP accounting does not allow double negatives, but Mr. Gorman cannot not adjust. Will he go all pro forma? Good morning, everyone. This is Bloomberg Surveillance. We're live from our world headquarters in New York. I'm Tom Keene. Not with us is Francine Lacroix. Naira Che is very, very much with us in London today. Naira, how is Prime Minister May doing 3 days or whatever it is on from Chequers? Is she walking back her story as well?
Well, do you know what? She managed to get this customs bill through with a bit of a knife-edge vote, Tom. But the big question is whether in doing what she needed to do to get those votes through, she's actually sowing future discord. And, you know, I was talking to Emma Ross-Thomas, our Brexit editor, earlier, and she's saying that the implications of this is that every single vote will come down sort of to the knife edge from here. And that makes things more challenging, of course.
And Emma Ross-Thomas, of course, does not allow double negatives on the floor of Bloomberg News. Right now, with your first word news in New York City, here's Taylor Riggs.
Tom, Naira, Google is about to set a dubious record. Bloomberg has learned that the European Union will fine the company about $5 billion over Android apps today. That's the most ever for an antitrust penalty. The fine will end an EU investigation into Google's contracts with smartphone manufacturers and telecom operators. As we've been mentioning, President Trump has made a rare retreat from something he said. The president says he accepts the conclusion by U.S. intelligence agencies that Russia interfered in the presidential election. That came after a backlash from Republicans over his remarks at his meeting with Vladimir Putin. Still, the president said that other people also could have meddled, and he just tweeted that many people in the intelligence community loved his performance in Helsinki. There's likely to be more drama over Brexit today in Parliament for British Prime Minister Theresa May. May faces Prime Minister's questions, and her former Foreign Secretary Boris Johnson could signal whether he intends to challenge her. Plus, May's supporters are under fire for the tactics they used to win a narrow vote in Parliament on her Brexit plan. And the European Commission will tell EU member countries they better be prepared for a no-deal Brexit. The London newspaper The Telegraph says the document urging countries to boost their Brexit contingency plans could be published tomorrow. That will be the day the UK's new Brexit negotiator, Dominic Raab, visits Brussels. Global news 24 hours a day on air and a TikTok on Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Taylor Riggs. This is Bloomberg. Naira, Tom.
Taylor, thanks so much. Equities, bonds, currencies, commodities, right to it right now with the yen leading, strong dollar, weak yen. Future stocks go nowhere, but down 25,000. Euro in that range, back under 117. Oil can't get a bid. Next screen, please. Tania, if you would. The VIX 12.00 showing that bull market. And the 30-year bond, Priya Misra will provide wisdom here in a moment, under 3%, 2.96%. We had a yen of 113 moments ago. Gold can't find a bid either. Gold near is an interesting story.
Yeah, absolutely, Tom. It hasn't always acted quite as that safe haven that you might expect so far this year. But looking at European equities, their bid up some 0.5%. We've seen some outperformance from car makers on the possibility of the talks between the US and EU on tariffs. Interesting that German bunds and European equities are bid at the same time. Meanwhile, cable getting hit from that inflation data, difficulties for Theresa May, but also it's a story of dollar strength. And Brent crude also lower, along with WTI after that inventories data, Tom.
Naira, thanks so much. On Amazon, this just out on the Bloomberg from Piper Jaffray. This really shows you the bull market. Amazon Prime Day. Amazon price target raised to $2,075. That's a wow statistic from Piper Jaffray. And of course, Amazon Prime Day was this ginormous sale that they did. Kevin Cirilli was in Finland with the president at the presidential palace, and he was looking at Prime Day going, what toy can I buy right now? Mr. Cirilli on set with us in New York. How is the president this morning? NATO, England, Finland, major walk back. What's the next for the President of the United States?
You know, there was a bombshell headline that crossed the terminal yesterday, as well as coming out of Capitol Hill, and that is that Senator Marco Rubio and other lawmakers are now calling, Tom, for Secretary of State Mike Pompeo to testify before the Senate about the performance in Helsinki. That means that there are widespread concerns and that they're going to be taking a lot of questions on this on Capitol Hill in front of all of those cameras in the coming weeks.
And we're going to be careful here, folks. I read the Merriam-Webster definition of treason last night, and I'm sorry, it ain't it. I mean, the basic idea here is it's the emotion in the interviews and the blah, blah, blah and all that. But the reality is the Senate has a tool called censure. Can they move towards not impeachment, not treason, not all this other stuff, but just a simple censure?
Well, they could. I don't hear any realistic talk of that in the immediate short term, particularly with the Republican-controlled Senate. That said, I would point to policy positions that the Senate has taken, both on trade in the situation where you have legislation put forth by Senator Bob Corker, a retiring senator from Tennessee, who has argued and advocated and gotten nonpartisan legislation support for something that would make it more difficult for the president to use Section 232, citing national security concerns on trade.
Yeah.
And I would also note what we're seeing yesterday in calls for the Secretary of State to come and testify, and the criticism that we've seen in terms of the Speaker of the House, the top Republican in the House, being critical of the president for that performance in Helsinki.
Naira?
On that performance in Helsinki, Kevin, I mean, I know we're looking forward to what might happen from here, but to your best knowledge and from people you've spoken to, I mean, what happened? Was this all planned from the start in terms of saying one thing in front of President Putin and then backtracking? Is this just semantics? What's going on?
Well, first and foremost, Naira, I would note just the political world that we live in right now, which is increasingly, as we all know, polarized and intense. That was a president who was speaking behind the podium next to President Putin in Helsinki that was, quite frankly, the President Trump that I'm used to seeing on the campaign trail in a massive stadium filled with supporters. It was not the president that we see typically when he's talking with another head of state or a senior-ranking diplomat at the White House that we've also covered. But the second point that I would make is just the policy and what we did not get, and that is a reversal of a lifting of sanctions against Russia for their annexation of Crimea. We also did not get a change in U.S. policy position regarding the gas pipeline from Russia to Europe, and nor did we get any real switch in the New START program regarding nuclear disarmament talks. So on the substance of energy, not much shift in policy, but on the issue of politics and the theatrics, a very clear departure from what we're used to seeing.
Right, and on the theatrics and the many faces of President Trump, which one is going to show up for the rest of this week?
I think this is a president who is doubling down in terms of the defense of his administration. There has not been a public White House briefing from Press Secretary Sarah Sanders in quite some time, and those calls from lawmakers on Capitol Hill, I think, will dictate how long this plays out.
Kevin, the high point of our work yesterday was a conversation, a discourse with Admiral Stavridis, the former Supreme NATO commander, an esteemed naval officer. He was scathing about the people in the administration, almost begging for them to resign. Where is that, and what is that discussion this morning in Washington?
Well, I'm not sure that there's any talk that there would be any significant resignations right now in terms of the administration. That said, I think that this is a very unique situation because...
And fluid.
It's fluid, but also just, Tom, to your point, just the level of the seniority of Republicans who are critical of this, but also from the Senate Majority Leader's perspective, Mitch McConnell, really the architect of the midterm elections, so close. And I can't stress this enough.
Please.
I mean, there is a base of President Trump's political movement that has not deserted him, that feels that he is a political outsider overseas, representing in a non-political way what they elected.
Kevin, going back to Helsinki as well, I know we're focusing very much on what happened with President Putin, but I mean, another thing that came up, of course, that had a big reaction was President Trump referring to the EU as a foe on trade. And I bring this up because we're hearing that at this meeting between President Trump and Juncker next week, they're supposed to be discussing the EU car tariffs. What could we hear out of that?
Well, the president has argued consistently, along with the Commerce Secretary Wilbur Ross and Treasury Secretary Steven Mnuchin, just that they are going to continue to double down. The president that we saw on this international trip was much more in line with his economic advisor, Peter Navarro, as well as his former top political advisor, Steve Bannon, in terms of articulating a global trade economic view. This is only going to continue. The president really going as far to be as critical in public with regards to the EU on trade. But let's also not forget the other headline yesterday on trade. It wasn't out of the U.S. It was out of the EU. The EU signing the largest deal in its history with Japan.
Right. With Japan, excuse me. It's a jet lag clicking in here. Cirilli came back on a Gulfstream, so he's not jet lagged. Let me go to a tweet here 2 minutes ago from the president. While the NATO meeting in Brussels was an acknowledged triumph, with billions of dollars more being put up by member countries at a faster pace, the meeting with Russia may prove to be, in the long run, an even greater success. Many positive things will come out of that meeting. And yet the sidebar in the New York Post this morning is Mueller asking for 5 people to be granted clemency, if you will, so they can testify against Mr. Manafort. All of these things, EU, Japan, Mueller, all of them, they coalesce into a moment, don't they?
They do, because of Russia's energy relationship with Europe and Russia's trade relationship with the rest of the world and how they're trying to get into the Middle East. But to the president's point, because look, to the president's supporters, they're looking at I mean, you can agree or disagree, but the facts are they're looking at the developments of the past 24 hours, and this is what I hear when I talk to folks aligned with the president. And they say, wait a minute, what about that Russia reset that the Democratic Party tried to do in the Obama administration? So, again, we're living in increasingly tense political times. Right. But to your point, all of this is now impacted by these geopolitical shifts that just seem to be happening rapidly.
Thanks so much to Bloomberg Chief Washington correspondent Kevin Cirilli. Great to have you with us. And coming up later today, a conversation with the European Union's Competition Commissioner, Margrethe Vestager. Of course, a pivoting way here. We heard today about that fine, the possible fine, record fine on Google from the EU. This is Bloomberg.
This is Bloomberg Surveillance. I'm Taylor Riggs. Let's get the Bloomberg Business Flash. Billionaire Elon Musk has apologized to a British diver for remarks that briefly appeared to rattle investors in Tesla. Musk tweeted that he was sorry for referring to Vern Unsworth as a pedophile. Unsworth was one of the divers who rescued the boys' soccer team from a flooded cave in Thailand. He had criticized Musk and the mini submarine he built to help in the rescue. A shakeup at Texas Instruments. CEO Brian Crutcher is out after less than 2 months on the job. The company says he violated its code of conduct relating to personal behavior. Former Texas Instruments CEO Rich Templeton will resume the role on a permanent basis. And Steve Ballmer became famous for its high-energy performances while he was CEO at Microsoft. And the billionaire hasn't changed now that he owns the NBA's Los Angeles Clippers. Ballmer is this week's guest on the David Rubenstein Show, peer-to-peer conversations.
I yell and scream. I've become a little more moderate, so I preserve my vocal cords because it certainly can be a problem when you, let's go, let's get these guys, yeah, it can be an issue.
And you can watch the entire interview with Steve Ballmer on The David Rubenstein Show. That's at 9 p.m. New York time here on Bloomberg TV. And that's your Bloomberg Business Flash. Naira, Tom.
Taylor, thanks so much. As we talk political economics and international relations with Mr. Cirilli, we need to keep in mind the markets can give us indicators. Priya Misra owns at TD Securities what is always out front in terms of doom and gloom. No, not the equity markets, but looking at fixed income, and she joins us right now. You and I know always in every case, fixed income signals bad things to come first. Is it signaling the gloom that's so pervasive now? Is fixed income signaling recession, inversion, and all these other bad things?
I think fixed income is signaling that the Fed is pretty well priced here. I think the fact that the curve is flattening is telling you that the Fed is going to hike to neutral and then stabilize. I think Chair Powell, if he was to force the Fed here to go above neutral, I think then you get an inversion of the curve. That's I would say, not a very good signal for risk assets for the economy. But I would say the market so far is sort of cautiously optimistic that this Fed is not going to push the envelope too much.
I'm not going to bring up the real Fed funds rate chart. I left it up in Helsinki. Bob Sitch gave me that years ago. But I am going to say we don't have negative interest. We don't have real rates. We don't have a tangible real rate. Is the Fed moves up, is it a linear function, step by step, like the Three Stooges, step by step, inch by inch? Or is it quadratic where it begins to have a bigger impact late this year and into next year?
That's I would say a pretty key point here. I think the market is pretty non-linear. So as you get close to neutral, as the Fed gets to, I would say 275, 3% on the funds rate, I think it has sort of a exponential impact on risk assets, on, I would say, risk premium, on equity markets. So you talk about this sort of quadratic function. I think it's really as you lead up to neutral. And that's why I thought Chair Powell's comments yesterday, it's all about neutral. I think that's the key issue. The market really doesn't know what neutral is. It's an immeasurable quantity. We know productivity is not picking up. We know labor force participation is not really picking up. So if that does not pick up, if long-term growth for the U.S. is really stagnant, then I would say neutral rate is anywhere from 2% to 3%. So we're really entering into this neutral zone.
Yeah, Priya, I mean, the market may not know where neutral is, but there's questions over whether the Fed itself knows as well. But we look at rates on one side, but also balance sheet runoff. I want to ask about that because that can have implications for where the curve goes from here as well. And you say that markets are not really talking about the likelihood that balance sheet runoff could end sooner. Why would it end sooner?
So I think this is all essentially to do with, what is the true excess reserve demand for the banking system? I think pre-crisis, there were no excess reserves in the system. But pre-crisis, there was no LCR either. The fact that we have this liquidity coverage ratio now, I think, does require banks to hold on to more reserves. As the Fed is letting the portfolio run off, reserves are shrinking. Now, if banks do demand reserves, I think that they're going to push up their funding rates. I think that's going to have an impact on all risk assets. If you can buy, say, 3 months or you can, let's say, deposit money for 3 months at about 3%. Why buy mortgages? Why buy equities? I think that then starts spilling over across risk assets.
We've got to steal back right now over back to the land of the president. He is tweeting out a tweet storm this morning, and this on North Korea and Russia. This is very important. We put out this headline across the Bloomberg and the tweet. Of course, Russia has agreed to help with North Korea, where relationships with us are very good and the process is moving along. There is no rush. The sanctions remain, exclamation point. Big benefits, an exciting future for North Korea. End of process. I guess our reporting this morning is the president is decidedly back in Washington, staying on message. We'll have much more on Washington and our international relations. And, of course, with Priya Misra of TD Securities, we look at what is in the markets. What is in the market right now is weaker yen, stronger dollar. This morning, again, the president tweets. We'll have more for you. This is Bloomberg.
I'm Naira Chahich in London with Tom Keene in New York. Now, let's turn to trade. And European Commission President Jean-Claude Juncker will meet President Donald Trump in Washington next week to explore the possibility of starting negotiations on reducing car tariffs for several key trade partners. This is according to two people with knowledge of the plans. It comes as the Trump administration is opening an investigation that could lead to tariffs on imported uranium. It would be another escalation in a so-called trade war. Joining us now from Brussels is former Finland Prime Minister Alexander Stubb. And still with us in New York is Priya Misra of TD Securities. Mr. Stubb, let me come to you first. Good day to you. Do you hold out much hope of any kind of outcome, concrete outcome, from the talks between Juncker and President Trump next week?
Well, I think probably quite often when you discuss with President Trump is a little bit unpredictable, so you can't really make estimates. But I think the European Union and Jean-Claude Juncker and his team are doing the right thing. I mean, only on Sunday they were in China talking about trade deals. Right after that, they went to Tokyo to talk about trade deals. So you can quite clearly see that the United States is leaving a power vacuum as far as free trade is concerned. And that power vacuum is being filled by the European Union, which is doing a lot of bilateral trade agreements. And hopefully we can get something going with the United States as well.
But does President Trump have a point when he criticizes the EU on tariffs?
Yes and no. I think tariffs are something that should be, at the end of the day, negotiated multilaterally in organizations such as the WTO. If you don't do that and you go purely bilateral, then you usually get into a little bit of auction type of a situation. But to be quite honest, I think the more free trade we can have between the United States and the European Union, the better. And that's why I think the best avenue should have been to push for the so-called TTIP agreement. We also made a great free trade agreement with Canada, and I think those are the types of issues that the Americans and the Europeans should deal with, because, to be honest, there are absolutely no winners in trade wars.
Mr. Prime Minister, wonderful to have you with us today. I just got back from Helsinki, and I mentioned Tyler Brûlé at Monocle talking about it as the most livable city in the world, and I saw that. Now, if you can just keep the sun out 10 months of the year, that would be plus for me as well. What's the power of your Finland? What's the power of Poland around the major countries of Europe? Do you people have a tangible power, given the focus on Chancellor Merkel and the others?
Well, I do think that we're seeing a shift of tectonic plates in international relations at this particular moment, and the long-lasting alliance between the United States and the European Union is a little bit shaky, and in that we need middlemen, we need mediators. And I would argue that, for instance, Angela Merkel is one of those. Jean-Claude Juncker, Donald Tusk are two others, Emmanuel Macron. We're all trying to get along, but I must say that diplomacy in today's world, as we saw in Helsinki, is getting a little bit rough. And my thesis is that diplomacy is, at the end of the day, about human relations, about communication, how you treat others. And right now we're seeing language which I don't think is very comfortable in international relations.
Are we seeing an economic backdrop that will pull us away from the negatives of populism? Are we going to get tolerable economic growth in Europe, sustained economic growth in the United States and Asia that will allow us to move away from the harmful effects of populism?
Yes and no. I mean, I was in government for 8 years, and that happened to be the period of an economic downturn from 2008 to 2016. And of course, when you're in power in that type of situation, it's very demanding, it's very difficult, because what you're doing essentially is pushing austerity. Right now we are seeing a fairly good growth spurt, I would argue, in the European Union, the Eurozone, and also in the United States. But at the end of the day, it's not so much about growth. It is about how that growth is divided and what the perception is about income gaps. And if we can narrow the income gaps and basically distribute economy more fairly, then I think we will see a reduction of populism. If the gap keeps on growing, as we've seen in some countries, then unfortunately I think the populistic forces will be stronger, because they will feel left out. I mean, the best way I heard it expressed once was in a panel. Someone said, our GDP has grown, and someone from the audience said, well, perhaps your GDP, but not mine. So income gaps is what we need to address.
Mr. Stubb, let me just get your insight on Brexit, because Theresa May fighting within her own party on what feels like almost a daily basis. With the Chequers plan as it stands, is that what Brexit is going to look like at the end of the day?
Well, to be quite honest, I want to be a little bit hands-off and careful with Brexit, because in many ways this is an issue that is being negotiated on one hand by Michel Barnier from the European Commission, backed by all the member states, and on the other hand, with the UK government. And perhaps as an Anglophile married to a Brit, I would say that the problem right now seems to be a little bit of political mayhem in the United Kingdom. But more than anything else, it shows the complexity of Brexit. Brexit is extremely difficult. It has many different issues. So when you ask the question, is this what it's going to look like at the end of the day, my answer would be probably not. No one expected Brexit, and no one really knows or has the crystal ball to say what the final outcome of Brexit will be.
Mr. Prime Minister, one final question, if we could, on your Finland. We're all looking for export commodities, and I think for Finland it may be hockey players. Patrick Laine is doing pretty well for Winnipeg, to say the least. Is this your lead export in Finland? Not the gin drink with the grapefruit, but ice hockey players?
It's a good export. My dad is the chief scout of the National Hockey League here in Europe. All the European players go through him. This year was okay in the draft, but the previous year was excellent. I think we had 3 top 10 Finns in the draft, so it is a good commodity, I must admit. But I think Patrick Laine, I'm glad he did something with his beard.
Very good. Well, he did something with his beard. Lead news in Finland in the newspapers I could not read when I was there. Mr. Prime Minister, thank you so much for being with us with an update on EU trade and also Finland and the National Hockey League. Right now, we've got to get an update on the First Word News. Huge news flow in tweeting. Here's Taylor Riggs.
Tom, Naira, President Trump is trying to back up his assertion that the meeting with Vladimir Putin was a success. The president tweeted today that Russia has agreed to help with North Korea. He said there will be an exciting future for North Korea at the end of the process. Earlier, the president tweeted that many people at, quote, higher ends of intelligence loved his press conference with Putin. Several big names from the war on the last financial crisis are concerned about America's ability to fight another one. Ben Bernanke, Tim Geithner, and Henry Paulson all played prominent roles fighting the last one. And former Treasury Secretary Geithner said there are probably too many constraints to counter an extreme crisis. Former Fed Chairman Ben Bernanke criticized the tax cut as ill-timed. And billionaire Jeff Bezos plans to launch another rocket today. His company, Blue Origin, says the New Shepard rocket will be carrying a number of science and education experiments for microgravity research. This is Blue Origin's 9th mission. Bezos hopes to eventually send tourists into suborbital space. And you can watch the launch here on Bloomberg at 10 p.m. Eastern Time. Global news 24 hours a day on air and at TikTok on Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Taylor Riggs. This is Bloomberg. Francine, Tom.
Taylor, thank you so much. One of the things we've learned in the last number of days, our travels, Francine Lacroix and myself, what John Farrow and Pim Fox have done on Bloomberg Radio, is to look out 1 or 2 years. Long ago and far away in stable times, maybe we looked out a decade. Priya Misra with us of TD Securities on the intellectual reach out to 2028. And this, of course, has to be what Bill Gross would call financial repression. I'm sorry, retirees are getting killed on an inflation-adjusted basis. A decade long? Will it go that far?
I think so. I think if you look at global interest rates, they are so low that, this whole idea of divergence. So the U.S.
What do you mean by divergence?
So, European growth is, or inflation is not really picking up. The U.S., I think the Fed's dual mandate is being reached. But can the U.S. continue to grow by itself? And I think that's where the dollar is strengthening. That's why interest rates, particularly further out the curve, which the Fed really can't control, it's very hard for the U.S. 10-year to rise significantly if the German 10-year is at 35 basis points. So that's the divergence which I struggle with. I think the global rates market struggles with. And so I think until you get coordinated global growth, coordinated global inflation, and all central banks are able to normalize, I don't think you get this U.S. interest rate significantly higher from here.
Yeah, and is that the reason then, Priya, why the 10-year yield has just been in such a range? Or is it about the push and pull of what the Fed might be doing on one hand, but then the fears around trade wars on the other?
Exactly. So I think the Fed here, does want to hike up to neutral. The reason the market's not pricing in exact neutral is, I think, the trade war issue. But as you move further out the curve, the Fed has sort of less influence. That's where I would say the global interest rates matter a lot more. And that's when, if you look at the spread between JGBs, so 10-year JGBs are still close to zero. 10-year bonds are at 35 basis points. US 10-year, close to 3%, then looks very attractive. So I think that's this gravitational pull. I think global interest rates are keeping this gravitational pull towards U.S. interest rates as well.
Priya Misra with us with some interesting tone here on fixed income amid all the doom and gloom essays that are out there right now. She is with TD Securities. This will be an important and a timely interview. The gentleman from Texas A&M, Mr. Henseling of the House Financial Services Committee. Look for that in the 2 p.m. hour. Maybe Mr. Henseling on the double negatives of the president. This is Bloomberg.
This is Bloomberg Surveillance. I'm Taylor Riggs. Let's get the Bloomberg Business Flash. The turnaround is starting to take hold at Ericsson. North American sales rose 11% for the Swedish maker of wireless networks. And for a second straight quarter, a key measure of Ericsson's profitability improved at a faster pace than analysts estimated. Bloomberg has learned the government has given Boeing a $3.9 billion contract to keep developing 2 new planes to serve as Air Force One. That caps off a contentious battle with President Trump over costs. The Boeing 747 would be delivered in December of 2024, and that would be the president's last year in office if he wins a second term. And it's a tectonic shift for Warren Buffett's Berkshire Hathaway. Berkshire's board is removing a cap on stock buybacks. That gives Buffett greater leeway to return some of the company's $109 billion in cash to shareholders. And in the past, Berkshire has used its cash pile for more acquisitions. And that's your Bloomberg Business Flash. Tom, Nera.
Taylor, thanks so much. There's research, more research, and further research out in the street. Josh Brown of Reformed Broker yesterday put out a terrific essay of the skewedness of the equity market. 98% of recent gain coming from a small set of tech stock. Right now, Tobias Lefkovich joins us with Citigroup with Priya Misra of TD Securities. The narrowness here, Tobias, I've never seen. It just seems as narrow as Josh Brown talked about. Is it?
No.
It's not?
No.
Why not?
Look, if you go back...
It's not an Amazon market.
I'm not suggesting that large cap tech stocks haven't appreciated and added to the market's gains, but there's been maybe 40% of the S&P 500 that's actually gone down. So maybe those gains on those FANG stocks, as they're called, have just recouped the losses of those other couple hundred, and then the other 200 that have gone up have actually contributed to the gain of the market. It's really how you attribute the various percentage gains and the various market cap gains. So let me give you an example of this. We've actually gone back and looked at the data since the first quarter of 2016 and looked at what percentage of the S&P 500 constituents are outperforming the S&P. And back in the first quarter of 16, it was over 50%. Now we're about 45%, which has been about the average of the past 2 years. So think about it in the very simple terms. 225 names in the S&P have outperformed the S&P index. So it's kind of hard to say it's so narrow to 5 or 10 names. It really is.
Okay, this is important. Naira?
Yeah, talking about performance, we like to be inclusive on surveillance, don't we, Tom? So I've got a chart here that's going to appeal to both Tobias and Priya, hopefully. So what this is showing, and bear in mind, we're talking about gains across the board here. This is normalized going back to the 23rd of March of this year. The rising dollar has weighed on US companies with a large percentage of foreign sales. So what there, you're looking at the white line. The blue line is the S&P 500 focused US revenue exposure index. Tobias, when you factor in the dollar, how does that affect what you might be more positive or more negative on the S&P 500?
So the dollar has, if you really want to have a great chart, that's a good chart. If you want to have a great chart, look at the relative performance of the S&P 500 versus the Russell 2000. So small cap stocks tend to do better in a rising dollar environment, somewhat mistakenly related to this idea that there's much less exposure to international revenues in small caps. Small caps are about 80% domestic, and if you look at the large cap S&P 500, it's probably more about 75% domestic. People think it's more like 50, they're wrong. Even areas like technology, and particularly semiconductors, about 70% of semiconductor sales go to Asia-Pac. Well, they really don't. They go to assembly facilities in the Asia-Pacific region, and then they get resent out of those countries or exported out to developed markets, particularly the U.S. and Europe. So even that's a miscalculation. I understand why people do it, but they don't sit in the, again, you sell the chip to a destination in China, but it just does not stay there. So you've got to think about where the demand is coming from, and I think people get that one wrong. But I do believe the small cap, large cap trade is all about the dollar. It has been for several years, and that's probably even more powerful than the international revenue calculation.
Interesting. And I mean, we've been talking particularly about small caps in terms of perhaps a place to hide in the event that we get that trade war escalation. If you look at sectors, are there any that you prefer particularly or dislike in the event of trade war escalation?
No, there's a tendency to kind of think of healthcare as a somewhat protected area. I mean, it's unlikely if somebody in Europe is taking a statin and they want to get back at the U.S. And say, good, I'm going to let my cholesterol go up. It's unlikely they're going to do that. They're still going to buy that drug. So I'd say if you look at pharma biotech, it's probably one of the more insulated areas.
I want to open the debate here with fixed income and equities to a really interesting idea. Priya, let me start with you. Is dividend and dividend growth a proxy for yield?
It has been for the longest time. I do think now, if you can buy 3-month Treasury bill yields at 2%, should you be buying equities for dividend?
I'm
not so sure. I would argue no. I think, you can take no risk. You can take no credit risk, no duration risk. Buy 3-month T-bills versus
I mean, twice we got to brush off Homer and Leibowitz. We're almost back to a normal bond market here. Or is dividend growth going to still be there? We saw Mr. Buffet talk about share buybacks here at Berkshire. I mean, is financial engineering still going to give us dividend growth?
So dividend growth, if you look at something like the S&P Dividend Aristocrats, it clearly outperforms the S&P 500 over time. So the question is, what's your time frame? If you're saying I'm going to own dividend-oriented stocks with dividend growth over the next 10 years, very different than are you going to own in the next 6 months. Number two, though, on the buyback versus dividend kind of argument, what you have to kind of spend a few minutes looking at is not companies that buy back occasionally. We do something that we call serial share shrinkers, companies that buy back stock every year and actually reduce the share count. Those stocks tend to perform well, even better than the dividend aristocrats.
Tobias, we keep asking people when this bull market might end. I'm not going to ask you that. I just want to know what areas of the U.S. market are going to show the pain first, if and when that end of the bull market comes.
So you'd almost have to get to the mindset of it's going to be the very crowded tech names, large cap tech names where everybody's rushed into. They've outperformed in a way that is really remarkable. In the rising bond yield environment, they've outperformed when they don't typically do so. And keep in mind, in the S&P at least, it's 25% of the market. So it's probably the most exposed in that eventual downturn, whatever comes. Now, we do think already tech is likely to underperform because it's such a crowded trade, and we're not quite sure what that next catalyst for upside surprise are. And that's important because investors do, I always say that investors are very greedy. We want more and more and more and better and better and better. And there's a great story in tech today running from, cybersecurity, virtualization, automation, et cetera. Mm-hmm. But where's the next kind of big deal? Where does it come from?
You don't talk about individual companies. We all watched Netflix do a modest implosion. I don't want to overstate that yesterday, but it does come down to company A has a lot of free cash flow. Company B has free cash flow and a cloud of dust. And then there's certain companies where there's really no understanding of the when of free cash flow. Give us a clinic right now on how important sustainable free cash flow is.
It's very important, but people tend to think about very high growth potential stocks and with very sticky business models as eventually generating that free cash flow. So it doesn't necessarily have to be today, but there has to be that visibility.
So we're doing adverb, Graham, Dodd, and Coddle. We're doing eventually securities analysis?
Well, in a certain respect,
not doing these securities.
High growth companies that have very dominant positions, what Mr. Buffett would call moats around them, tend to get those premium valuations because there's a sense of eventually they're going to be able to generate huge cash flow. Look, I'm not going to talk about a particular company, but I have to admit I'm a big fan of Fauda.
Yeah.
So,
Priya, is there a moat around full faith and credit? I mean, there's different partitions of your world, but to the moat, is there a moat around full faith and credit that provides safety?
I think there is, to some extent. The U.S. is still or the U.S. dollar is still the reserve currency. So even though our deficit is booming, would you really put your money in Europe, where we're not even sure about the sustainability of the Eurozone, or the UK, where you have Brexit? So I think that's what creates this full faith in credit. I do worry about an issue around how much did tax cuts essentially boost near-term GDP, and now the question really is, are we going to get this boost to long-term GDP? And that's what Chair Powell is saying. Well, I'm not really sure. Is the equity market essentially pricing in this long-term growth pickup? Which, if that doesn't happen, is that a risk issue as well?
Is the equity market pricing in that long-term growth pickup then, Tobias?
So look, if we look at the market, and I think Priya's comments are well-founded, but I think too many people are just focused on the tax cuts and less on the big fiscal spending program that was put in place in April. That's going to add maybe as much as a full point to GDP next year, which kind of gives you at least the visibility into 2019, even if there's been some pull forward of economic activity into 2018 from 2019 because of the tax cuts. So there is kind of an offset. I think the bigger question is, what about 2020, 2021? And the market will probably have a little bit of multiple compression as a result of that uncertainty. And then by the time we get to kind of mid next year and we have a little bit more visibility to 2020, then the market can kind of reassess. I think in the near term, the market's not likely to price that in.
In the news flow, we got to go double negative with Priya Misra here. A final question, if we can. Can we not have a low rate, Donald? I mean, are we going to get jawboning in the next 12 months from the president?
To keep rates low?
See, you're confused. That's because I used the double negative in an amateur way. I cannot not have low rate Donald, is what it comes down to. What's he going to do?
I think he knows better than to sort of interfere with the Fed. And I think Chair Powell is telling us that he wants to be extremely politically independent. That's how the Fed has operated. But I think the Fed themselves are a little confused. What exactly is neutral? Is it 2%? Is it 3%? And how much should they overshoot? So I think all the uncertainty around neutral itself, and the fact that we don't really have any inflation pressure that should make the Fed go above neutral, I think that actually keeps the Fed from hiking too much. So I don't think there will be political pressure, but I think just the fact that long-term growth is not particularly picking up and we don't have inflation should keep interest rates low.
Thank you so much. Priya Misra of TD Securities and Tobias Levkovich of Citi will be staying with us. Remember that Bloomberg users can interact with the charts shown using GTV Go. You can browse those recent charts featured on Bloomberg TV to catch up on key analysis and save charts for future reference. But I've just got to bring you some headlines as well from the UK Trade Secretary Liam Fox. This is coming from a tweet, he's giving a speech at the Royal Society. You can see him doing that there. And he said the UK is to hold a consultation on joining the CPTPP trade pact. So the aim is for trade deals with the US, with Australia and with New Zealand. The CPTPP, also known as the TP11, was signed last March and will come online 60 days after it's ratified by 6 of the 11 signatories. This is Bloomberg.
And the way that we've been using UK export.
Breaking news, the granularity of what Boeing and Airbus do. Guy Johnson with a terrific interview a few days ago with the leadership of Boeing. And it's not about one big order. It is about little orders summing up. $13 billion, not that much in the world of aviation to Vietjet. But nevertheless, this is the granularity of how you get business done in the aviation business. Boeing there. With another Asia story. So much of that has been the leadership of America banking, having a financial system that can reach out internationally within the delicacies of his employment at Citigroup. Tobias Levkovich cannot talk about individual banks, but we go to a single best chart which partitions American banking, and this is exaggerated. It's Fortress Diamond and JP Morgan versus the beleaguered European banks, even the excellent BNP Paribas in green. Deutsche Bank and UniCredit disasters down below. What's in the pixie dust of American banking right now?
Look, the one thing American banks did, which many of the Europeans didn't do, is that post the crisis, they recapitalized themselves fairly sharply. They diluted themselves. Stocks went down a bunch. But they did create that new capital base that gives them the ability to handle any kind of volatility. Europe went through, obviously, the same global financial crisis in 2007, 8, 9. And then they went through their own periphery debt crisis in 11, 12. And they kind of did piecemeal.
They didn't dilute. Stop it. The elites in Europe didn't want to dilute, right?
Well, look at the performance. Was that necessarily the better option? Giving yourself capital to handle the problems that could evolve is obviously painful at day one, but probably really, really good news over the next 9, 12, 24, 36 months. And I appreciate that. And the Japanese banks diluted terribly in the early 80s, or early 90s as well, rather. And again, it gave them the position to handle the next problem. And European banks avoided that, but now look at the problems that they're dealing with.
Tobias, some of the regulatory changes that we've seen recently, you could argue, favour the banks that are non-SIFI, some of the more mid-sized banks. When you say you're overweight banks, I mean, what size are we looking at within that category?
So we're looking across the board, but I deeply appreciate what you're saying, that the regional banks get more of the regulatory relief. I don't think that is the story for the banks. I think everyone's fairly aware of stock buybacks, capital return, dividend increases, less regulation. Those kind of things are very well in the marketplace. What I don't think is necessarily well understood is that we're likely to see a pickup in commercial and industrial loan activity. We saw an inflection a quarter ago. We're seeing some loan growth now. I think you're going to see even more loan growth as the year progresses, based on what has historically been a 6-quarter lag between the senior loan officer survey for commercial industrial lending standards and actual loan activity. So it will impact the broad base of it, but I appreciate the comments about regulatory relief more impactful being for the regional banks.
Very good. Tobias Lefkowitz, we've got earnings here from Morgan Stanley. We'll see how Fortress Gorman does as well. Of course, it's been an asset-based story from the get-go. 130 is what we see here. And in their press release, which, Mr. Gorman, if you're watching, I know you do this morning, is in English. That's a nice thing as well. Strong performance in investment banking, sales and trading, and they move away from wealth management, where they had a pre-tax margin, Naira, of 26.8%. You say, why is Gorman? That one statistic is jaw-dropping to pull down 26.8% out of wealth management as well. Of course, Naira, we'll have that out much, much more today. You're going to see that across all of Bloomberg today on radio and television, tearing apart Morgan Stanley performance. And again, all of this coming off the Goldman Sachs announcement of a changing of the guard yesterday. Naira, what will you look at quickly today?
What will I be looking at? Well, I'm always going to be keeping an eye on Brexit, but these earnings that you just showed, I mean, what's going to be interesting is to see the comparisons, as there always are, between Morgan Stanley and Goldman, as you were just referring to there, Tom. John Ferro and you on Bloomberg Surveillance Radio next. This is Bloomberg.
He leads the company that operates 4 of the most popular cable channels for women, producing a wealth of content distributed around the world. After helping to create MSNBC and CNBC, David Zaslav took the helm at Discovery in 2007, where he moved quickly to streamline the company and relaunch channels so he could take it public all within the span of a year. Since then, Discovery's market cap has quadrupled. And now, Discovery is coming to terms with a new world, one where viewers increasingly turn to streaming services for their programming and are moving away from Discovery's core business of traditional cable channels, leading Zaslav to make the biggest deal of his life, betting once again on content. On this edition of Bloomberg Big Decisions, David Zaslav.
David Zaslav, thank you for joining us. Great to have you.
Great to see you.
So you've just completed the biggest deal of your career, I believe, $12 billion for Scripps. Why did you do it?
Well, it's interesting. There's a financial reason, and there's also a strategic drive that we think could really work for us. Here, we're in the cable and free-to-air business. Scripps is in the cable and free-to-air business. And so we both do the same thing. It's what we do for a living. It's what we know how to do. It's what we do every day when we come to work. And so we feel that we're quite comfortable in putting these two companies together. And the synergy gives us the opportunity to, we think, have a target of doubling our free cash flow. So we generate about $1.4 billion in free cash flow. Scripps generates about $8 billion. And we think we can get to 2, 8, or 3 through revenue synergies by coming up with a lot of cost synergy, mostly cost synergy. And so in a turbulent time, if we can emerge with almost $3 billion of cash, it creates like a moat in a turbulent time. We're different than most media companies in the world, and there are a lot of great companies. But whether it's Disney or whether it's Rupert or Comcast, NBC, CBS, they're mostly in the scripted and movie business. Netflix, Amazon, that whole side of the business is focusing on, as if it was a soccer field, the ball is scripted series and scripted movies. So it's very crowded. It's getting very disrupted. And you know, the number of scripted series have gone from 200 to over 500. And Apple and Amazon and Netflix alone are spending almost $20 billion on top of these companies. So we look at that and we say that we're not that. Well, we're on the other side of the business. The other side of the business is we own all of our content. It's real-life entertainment. We see ourselves as a global IP company, whether it's with Oprah, with Discovery, with Animal Planet, with ID and crime or science or cars. And with Scripps having food and HG and cooking and travel, we put it all together now, and we're on a different area of the field. And so we say very good luck to them. I think there's a lot of great companies. It's going to be very disrupted. And our game is to take those great brands around the world, and as people over the next few years look to pull content onto devices and phones, we think the functional value of food, home, cooking, science, cars, that we'll do better, or we have a chance to do better, than if we were, if somebody was going to pay to watch The Crown on a mobile phone. So a lot of it is about owning IP and figuring out a way to get to mobile where people will pull your content.
Well, let's talk about getting to mobile, because that's the big disruption everybody in media is talking about as a practical matter. How will this help you get to scale, as it were?
Well, we're about 20% of the viewership in the U.S. at any given time. And we have 4 of the top 6 or 7 cable channels for women with HG, Food, ID, TLC. And then we have OWN, that's #1 for African American women. So I think we have a great menu to offer to an advertiser. Discovery is in 220 countries. We have an average of 10 channels in every country in the world. So we're kind of a factory machine of driving IP all around the world. And so we could do what very few media companies could do. We could do a global offering of food. We could do a global offering of all of our content.
In this new world of streaming, will viewers be watching for platforms like HGTV or Discovery, or will they be looking for programs like The Crown, like Game of Thrones?
Well, it's hard to tell behaviorally exactly what people are going to do. But by doing this deal and generating free cash flow and taking a look at the assets that we have, by owning science globally, by owning every piece of IP that we own effectively, except for sports, we're long IP. We've spent a lot of money to own it on all platforms. And that gives us the opportunity. If Amazon said, I'd like to do an offering globally, the only other media company that could do that would be Disney, and it would be in the kids space. And so we would raise our hand and say, terrific, we have a great family offering. And so for us, it's about the long tail. And we think in the end, people that love food are going to pull it. We're not sure exactly how it's going to work, but we think the fact that we own all of our content and we have passionate viewers that they love us like they love a sports team. They'll come home and they put on HG all day long, or they'll put on food. And so we have a sustainable growth business with our synergy. And then we have all this IP that we could take direct to consumer, and we've started to do it.
Can you win in streaming without going through the bundlers? I mean, do you have to be on Hulu? Do you have to be on YouTube? Or can you do it directly? Is your product strong enough?
We don't know. Everywhere else in the world, we're on almost every skinny bundle. Here in the U.S., we're in most of them. We're not on Hulu, and we're not on YouTube, but we're on most of the others. And people love our channels. And so, one, we think that over time we'll get on those skinny bundles. We hope to. We'd like to partner with our distributors because they helped us build our business. And in many cases we are. We're partnering with AT&T on DirecTV Now. We partner with Brian on Comcast on his offerings, with Charter. So that's the best way to do it, kind of regionally. But there is an opportunity for us to go direct to consumer ourselves, which we're already doing in a number of areas, in cars and in sports. But we could also go to those big companies. If you take a look at what NBC, ABC, CBS, and Fox spent 3 years ago, and how much is being spent by Amazon, Netflix, Apple, and Google, there's a massive amount of share shift that's going on there. And these are real global companies, the likes of which we've never seen before. So if any one of those companies wanted to offer for $5.99 a compelling family-friendly service, we would either be most of it, we would argue we'd like to be most of it, or we could be all of it and see how it goes. Because anywhere you go in the world and you say Discovery or Animal Planet or ID or Oprah, people know our brands and they value them.
How will you make that decision about whether you go direct to consumer or you go through middlemen, essentially? How do you make that decision as CEO?
Well, look, right now it's not a fair fight because the direct-to-consumer businesses, the Netflix, the Amazons, we in media used to trade at about a 14 multiple because the view was that this great dual revenue stream cable and free-to-air business would go on forever. And the view now is that it's getting disrupted by some of these direct-to-consumer platforms that are global. There's a question of who's going to emerge and be the winner. We think, looking now, it's only the second or third inning, but we've carved out a very compelling spot of quality brands that people love, that we can offer globally, and we could offer them ourselves.
You stepped up big time on sports. That was a variation from what people had expected from you. Why does that make sense for you? You talk about disruption in media. There was a time not too long ago when you were the disruptor in chief, in some sense. I watched you from Capital Cities ABC across the street as you created MSNBC and NBC. You created CNBC. How does this compare with that disruption when you disrupted broadcast? Basic cable came in and really disrupted it. How does it compare? What did you learn from that experience you can apply now?
Patience. In that case, Jack Welch and Bob Wright were committed to try and take the broadcast business into cable. For people that were around at that time, it was pretty unusual. And it's important because the business that you think you're going to launch that's going to work is never the business that works. The audience is always going to tell you what they get nourished by. And that's what our business is about. That's what most businesses are about. When we launched with Oprah, the Oprah Winfrey Network, we had a dream, Oprah and I, that it was going to be about living your best life. And we looked strategically at the space and said, we can do this. But when we went out with the content, Super Soul Sunday worked terrific, but a lot of the other stuff was too earnest and the audience went away. And we had to figure out, what are they going to come back for? And it took us a lot of years, but we started to listen, what do you like? That's what our business is about. We don't want everyone to watch, but the Oprah Winfrey Network now is the #1 network for African American women. So for us now, we've broken our company in half, essentially. We got half the company that's about growing our channels, doing what we believe we can do as well or better than anyone in the world. Then there's a whole group that has to figure out, okay, how do I get over the top? What do people want when they consume content over the top, you know? And I think you have to be willing to recognize failure and use it kind of optimistically. Good, we know that now.
And you can do it without the blockbusters.
The way people watch our channels, it is hit driven if you're a broadcast network. The way people watch our channels, they come home and HG gets me. Discovery is my channel. TLC in Middle America is the channel that I love. I love Oprah. That's the channel that I watch. That's how they curate. Where do I get nourished? That's the business that we're in. We think that's going to be sustainable, and we think that ultimately they could either pull one of those really big, expensive platforms, or when they're looking to pull something that they want that's family friendly, with brands they know, characters they know, everywhere in the world, for a lot less than they would have to pay for that, we look different. And we got to, over time, we'll see if it's an aggregated offering, if it's an individual offering, but I think we got a game. But the first thing we got to do is execute on this.
You stepped up big time on sports. That was a variation from what people had expected from you. Why does that make sense for you?
Well, first, we're in every country. So when I say we're in every country, we have a sales team, we have a distribution team, we have creative people, we have marketing people, and we have strategic people. So we kind of know each country. And so when we looked at sports, Eurosport was not being individually fed into every country across Europe. So when we bought Eurosport several years ago, we looked and said, we can use our sales infrastructure. We could use our distribution infrastructure to drive more carriage. We could use our sales and marketing people. And it was a little bit of a leap, but it was driven by the idea that content used to be about getting inside of the television box, that rectangle. And even if you had content that was just okay, second or third choice, you did okay. When we launched our direct-to-consumer sports player 3 years ago in Europe, so we reach across 750 million people in Europe. We have the tennis, we have the cycling, we have the winter sports, we have summer sports, we have the Olympics. So we figured we have a great offering, 750 million people, $8, we should be able to do terrific. And we wrote 10 things that we thought we knew for sure. 8 of them were wrong. And the users told us. They said, okay, we tuned in for the French Open, but we didn't want to watch Tour de France. We love tennis. Or they told us that maybe the most interesting takeaway that we applied to the Olympics is that when people consume content on a device, they expect to hit the device when they get up in the morning and see content. And then they expect a few hours later to hit that device. You need to multiple publish. So if speed skating is starting at 2 o'clock in the afternoon, the people that love speed skating have to get up in the morning and see a 1-minute video or 2 1-minute videos or some information about, and we downloaded 700 pieces of short-form content in 21 languages every day to our Olympic player. And that's one of the reasons why we were able to aggregate about 500,000 subscribers. They love the sports IP, But they really, when people look at content on a device, they expect to be entertained and nourished whenever they hit it. And if you hit it and nothing is new, you're disappointed.
Can you do that and not step up into the really high-priced sports projects? Because that, to some extent, sounds a little bit like ESPN in the United States in the early days. They had lesser sports, and then they had to get into the NFL, they had to get in the NBA, and that, as you know, costs enormous amounts of money. Can you have a strategy that stops short of that?
Well, opportunistically, we have taken football. But we haven't taken football where we get in a bidding war with anyone. If you want to offer your content on a pan-European basis, there's only one place to do it, us. Or if you're a federation, if you're the Speed Skating Federation, you could sell it in every country. And the difference between the U.S. and Europe is in the U.S., it's one culture, one language, and everybody likes the same four sports, essentially. 90% of viewing, 80% of viewing is football, baseball, basketball, hockey. In Europe, there's a lot of sports that are number one in Northern Europe that are number 10 in Southern Europe. And if you're a federation, we're the one stop. And we've been very effective about getting a lot of content. And all the sports content we have with Eurosport, we've, as much as we can, we've gotten it long term, and we own it on all platforms.
You have scripts, as you say, you need to execute on that now. But is that enough for Discovery? Are you on the outlook for further acquisitions?
This is news, but not as you know it. This is TikTok by Bloomberg, the first and only global news network built for Twitter. 24/7 news, streaming live on Twitter.
have Scripps, as you say, you need to execute on that now. But is that enough for Discovery? Are you on the outlook for further acquisitions? Do you need to get bigger scale?
Well, look, as I said earlier, we're in a different place of the soccer field than everyone else. So we think if we could execute on this, own all those passion brands globally. Scripps never took food and HG and cooking and travel around the world. So we have an opportunity to take all that IP, we'll convert it into 48 languages, and we'll start to spread it around. So that'll be a revenue synergy if viewership increases, and we think it will. In Latin America, we've bought some of their content. But I like our hand here. We got some work to do. We got to pay down some debt. We got to prove out that we're going to generate that free cash flow and that we really did build a moat. But at the same time, we're going to be working really hard about learning how consumers consume content on devices. And we're talking to every distributor, because we're better off if somebody that's already in business with you and you're already paying a $100 bill can then have a chance to check a box and pick us. Today in the U.S., there's probably 25 or 30 million subscribers that are broadband only. The one service that's being marketed to them heavily is Netflix. And the industry built us, we built them, and together I think we're going to come up with something that's going to be pretty compelling in terms of a skinny bundle, because it's not sensible to have Netflix have all that field without us on it.
You said you need to pay down some debt because you do have more debt on your balance sheet than a lot of other media companies do. You've said you're going to save $350 million a year on Scripps. How are you going to do that? That's a lot of money, as you and I both know, to save in an operation.
Well, look, as we've looked at putting these businesses together, and it's early days. It's only been 5 weeks, but we've been working on it very hard for 6 months going up to it. We think that's rather conservative. These are one-over-one companies. We have 12 channels in the U.S. They have 6. So we're in the same business. We have 220 research people. They have 140 research people. We have 650 salespeople. They have 550 salespeople. And their people are really good. We put some of their people in charge in our new structure. And the idea is, who are the best and the brightest? Because when we looked at it, we said, when it comes to nonfiction, who are the best 2 producers of nonfiction content, and who is best at monetizing it? And we looked and we said, in some areas they're better than us, in some areas we're better than them. We put these 2 together, and we will spend $3.5 billion on content, maybe growing to more than that. This is a hard business. We're in the business of creating stories and characters and getting people to turn on their TV and love it.
You've referred a couple of times to John Malone, who's a shareholder, doesn't control your company by any means, but you know him well. What is it like to have John Malone as somebody you can call up and say, should we do this, should we do that? What do you think about what's going on?
Well, I think about my last 30 years in this business, and it's sort of like what you want for your children. You are who you hang out with. And it really helps define you, the narratives that you hear, the questions that you hear. And so I look back over the last 30 years and 15 years listening to why Jack didn't want to do an acquisition that we brought him, or what we need to do with cable, how we need to do it. Bob Wright, one of the most successful guys running NBC, the Newhouse family, Donald and Cy Newhouse, and Bob Myron, who's a genius and has been in the cable business and built Bright House, and John Malone. And so when I think about where people should be spending their time, yes, you'd like to get the right job. Yes, you'd like to think that you're going to make some money. But I took a 50% pay cut to go to NBC from a law firm because I thought I can get to hang out with the guys at the Peacock, and maybe someday I'll get to meet Jack. And a lot of the way I see the world, I still talk to Jack all the time. So I'm hearing Jack's voice, I'm hearing Bob Myron and Donald Newhouse's voice, and I'm hearing John's voice. And so for that alone, I'm one of the luckiest guys.
It strikes me that you're now running Discovery, which really appeals in the United States to a lot of the middle of the country. People that the President of the United States probably wouldn't object to. In fact, I understand the President of the United States is a fan of Shark Week. Actually, I read that someplace.
I hope he's a fan of a lot of our stuff. I think, I hope.
You helped create MSNBC. That is a channel in a very different place. What do you think about the media landscape today in the United States in terms of politics? Because it seems to become much more polarized.
Well, I can just say that the business changed. When we launched MSNBC, Brokaw and I and Andy Lack and Tom Rogers, there was a group of us, and Jack said, we're going to launch the best news network in America, and we're going to use the #1 news division in the world to do it. We had this amazing library. We structured a deal with Microsoft to get them in. They wanted the library at the time, and that was our ambition. I'm not going to game out the different news networks in America, but we have to be practical and recognize that at least some of them are following that model, because you on the one hand you want to do the best journalism possible. On the other hand, you want people to watch you, and you want them to watch you for as long as possible. And part of the way we as human beings determine our success is, are we in third place? Are we in second place? How many people are watching us? How many people love us? And so I think that's the journey. And luckily, I'm not going to be one of the guys to figure that out.
Well, but let's talk about how you keep score. That leads us exactly to a great conclusion here. How do you keep score? I mean, I see that now you've jumped up in the rankings, actually, including broadcast and cable. Big step up with Scripps. Is that the way you keep score? Is that how you just tell whether you, David Zaslav, are succeeding?
No, because there's lots of books that have been written about, more scale tips you over. So we're staying in our lane. And what's going to be successful for us, and we've made this decision. On every one of our channels, we've said, if you don't love us, if you're not one of the passionate viewers that loves survival, if you're not one of the people that love science or that love crime, go find some other channels that you love. When we're creating content for our channels, we want global audiences that really affiliate and have a passion for our characters and our message. And a big piece of that is we're not going for the best rating. We're going for the most potent audience that says, they get me. When I go there, I see something that I love. And if we put something on any of these channels that looks like we're going for ratings, they'll immediately say, what's this doing on here? And so they're quite clever, and you just got to continue. This is what we do for a living. Figure them out on TV and try and figure them out in terms of the devices as to what they're going to love and what they're going to pay for.
David Zaslav, thank you so much for spending time with us today.
Thanks, David. Good to see you.
Coca-Cola, a 130-year-old iconic brand and a dominant force in the $800 billion soft drink industry. Synonymous with globalization, Coca-Cola operates in over 200 countries worldwide. The beverage behemoth now has a new CEO. James Quincy spent the last 2 decades rising through the ranks at Coca-Cola. Now, as head of the company, Quincy aims to win over a new generation that shuns sugar, and to show the world that he takes the environment seriously. even as he adapts to a new world of technology. James Quincy sat down with us for an extended conversation. We wanted to understand how he plans to use innovation to transform every aspect of Coca-Cola, attempting to change its culture while managing a global checkerboard of regulations and tax regimes.
Coca-Cola operates in a lot of different countries, which means there's a lot of different regulatory systems, a lot of different legal schemes you have to really adapt to. Let's talk about a couple of those. First of all, the United States. The tax cuts. How does it affect Coca-Cola?
Yeah, we're still working through the numbers. I mean, our tax rate last year effectively was about 24%, so it's not the biggest change to us. Because we're an international company, the absolute rate hasn't affected us as much as perhaps some of the more domestically focused enterprises. But we're positive on moving the territorial system. So we think the simplification is positive in the long run. To the extent that it helps create more demand, that will be good news too. We're still working through the numbers that we'll lay out on our earnings call. Of course, we're part of having some of the money overseas, but in the end, if it generates more economic growth, that will lift all the boats.
Does the expensing of capital investment affect you at all?
Not in a great amount. I mean, it will make some difference. We'll lay that out, but that's not the biggest moving piece for us.
And if there is significant incremental cash available to Coca-Cola, have you decided yet, does it go into capital investment? Does it go into buybacks of shares? Does it go into dividends?
I mean, we weren't short of cash at the end of the day, so we've been a successful company. We've got the resources we need to invest in the marketplace. We're still working through exactly how the puts and takes work, because obviously you've got to pay tax on the cash first, or in addition. So we're looking at how we use all that and how we make the right capital allocations.
One of the really big issues for the United States right now is the so-called dreamers. These are the young people who were brought here as children. And the question is, do they get to stay as adults, essentially? Do you have at Coca-Cola people who are really uncertain about whether they can stay or not? There are about 700,000 more or less nationwide.
Yeah, we have some people in our company and in our bottling partners who fall under the Dreamers or the Dakar program. We would love government to find a way to make proper underlying immigration reform, and including finding a solution for the Dreamers so that it's not so disruptive and then they can stay. So hopefully they'll find a path to that. Of course, partial solutions may be necessary, but we would love to see fundamental reform.
You ran Mexico for Coca-Cola at one point, so you have seen this issue on both sides of at least our southern border. Do you see a path forward, a constructive path forward on immigration?
I think there's a path forward, but I think it also is connected, and it can't be completely disassociated when you think about long-term fundamental reform from getting both economies to grow. In the end, part of what drives the informal immigration is the disparity in the economic outlook. So having a community of North America where all the economies are growing actually helps solve that problem too. So I think leadership from the United States to drive growth will help solve some of these other issues too.
You've also seen NAFTA from both sides of the border. You've seen that issue, which is another hot issue right now in the United States. Has NAFTA overall been good or bad for the United States?
My view would be that free trade deals are good overall for all participants, and I think it's been good for North America and all the countries in it. Doesn't mean it's perfect. Very few free trade deals are perfect. So can it be made better? Yes, I hope they can make it better. But I don't think we should start deconstructing global trade. I think it's been a powerful engine for lifting all boats. It doesn't mean it solved all problems. There are questions of income inequality. There are questions of not all the rules were perfect and need to be improved. But let's go forward, not backwards.
So when President Trump first came in, he was very closely allied with many people in business. He consulted and he had panels that he talked with as well. Do you get to talk either President Trump or the administration about things like NAFTA? I mean, do they consult you or do you make your views known to them?
When there are things where we have a view or it affects our business, we make our views known either directly to the administration or through many of the business forums, like the Business Roundtable. There are enough points of intersection collectively and individually with the administration that they know what we think.
So from that, do you have any sense of where we're headed with NAFTA? Because there are conflicting reports. I mean, the Canadians seem to be preparing for actually U.S. withdrawal. There are a lot of people in Washington who say, no, we're not going to withdraw. Do you have any sense from your point of view of where we're headed?
My view on negotiations is you've got to let the negotiators negotiate. And if you're not in the room, you don't know what the answer is until it comes out. So I think the important thing for those that aren't in the room is to keep saying what they believe to be true, what they believe to be the areas where things can be made better. And then the negotiators have got to get in the room and thrash it out. And trying to work out what color the smoke is coming from the room doesn't lead you anywhere until they come out and tell you what the answer is.
Your native country has voted in a referendum to leave the EU. And I won't ask you what you think about that, but tell us how that's developing. I mean, is there a soft landing there that you can see? How would we get to it?
It does a bit go back to my point about negotiations. You're never really sure until the cake is cooked. I think the logic of the economics is a softer rather than a harder Brexit. I think in the end, whilst it won't be a catastrophe one way or the other, life will be better. There'll be more economic growth if it's a softer Brexit, but there's a lot of details and a lot of different points of view to work out, because in the end, the referendum wasn't between do you want this or that. It's like, do you want this or not want this? It wasn't a referendum around the version of the exit, which is kind of where we're trapped at the moment. And of course, there's a lot of negotiations going on. It's very important to get it right for the UK and to some extent for Europe as well.
Whether it's Brexit or whether it's NAFTA, how do these trade issues affect Coca-Cola's business?
I think one of the great benefits of the Coca-Cola system is we're global, but we're extremely local. I mean, we manufacture in every country virtually that we sell in. Virtually everything that's sold in the US is made in the US. Virtually everything that's sold in Mexico is made in Mexico. Virtually everything that's sold in the UK or France is made in that individual country. So the global trade restrictions or openings don't tend to affect us heavily in the moment. To the extent that they reduce or increase total economic growth, that's what matters to us. And so I think philosophically, we're pro global free trade because it drives economic growth. Therefore, let's focus on making those deals better because it'll provide the wealth to then solve a lot of society's problems.
You came in and took over Coca-Cola and really trumpeted innovation as critical to your future. I believe you have a chief innovation officer, but maybe you're the chief innovation officer in some sense. How do you innovate in a 130-year-old company that's so well known around the world, has been there for so long, has such an entrenched perception in people's views?
It's hard. I mean, any institution that's been around a long time, whether it's a company or a government or any organization, it's going to be very hard. So I think, from my point of view, if I'm not the chief innovator, I'm certainly the chief agitator for innovation. And what that means is, driving the culture to try and do a few things upon top of everything else we do. Stay curious. If we're not curious about the outside world, about the consumers, about the customer, about what's changing, how will we innovate? But curiosity just leads you to an insight. It's very passive. You need to drive empowerment so people feel they can go and do something, that they're not waiting for head office to make the decision, that they can get up in the morning and go and do something. And I think the next thing is you've got to be inclusive. You've got to try and connect the pieces because we've got a tremendous global knowledge and tremendous global system. Sometimes your idea has already been tried somewhere else. So connect to the other parts of the system. And lastly, we probably fell into the trap of trying to make things perfect before we did anything in the past. No, we need to learn from some of the software companies, have version 1.0, 2.0, 3.0. That gets us both innovation and speed. And if we keep pushing those four things, I think we'll make progress.
And how do you know? How does James Quincy know whether you're getting the innovation job done? And I mean that in the sense you're sitting atop a very large organization, a lot of people spread around the world. How do you judge whether the word's getting down and people are already changing their behavior?
It's hard to know, but the only way forward is to look for multiple signals. No, there's no one number or one metric that's going to give it the answer. So we have employee surveys where we ask people. We can look at the sales number and measure the success rate or the number and the success rate of the things we put into the marketplace. We can look at what our research and development pipeline is generating, and are we really getting new patents? Are we really making progress? So I think one has to have a dashboard to look across and say, is there progress?
How is technology changing the way you do business, and for that matter, your workforce?
is news, but not as you know it. This is TikTok by Bloomberg, the first and only global news network built for Twitter. Objective reporting that you can trust. Curated comments that provide insight. TikTok by Bloomberg. 24/7 news streaming live on Twitter.
Technology. It's disrupting just about every company that we know of today. How is it affecting Coca-Cola? And first, talk about how it's affecting your relationship with your consumer. How you deliver to your consumer, things like e-commerce, how you market to your consumer.
Yeah, I mean, we kind of look at it in three buckets. How we engage with consumers, you know, there used to be TV advertising, now there's social media. The ways of engaging with the consumer are changing rapidly. Who the customer is and how the shopping actually happens is changing rapidly. And of course, internally it's changing rapidly. With the consumer, around the world, you know, TV is still the biggest vehicle, maybe less so in some of the developed economies, but around the world it's still the biggest vehicle, but a lot of it's going into social media. We work closely a lot of the new tech companies in social media, trying to find ways to continue to have a brand role. I mean, in the end, someone's got to pay for the content to be developed, whether that's through advertising or sponsorship. So I think there's a lot of change going on. We're adapting. I think we feel we're kind of towards the front end. But what I'm totally clear of, it's going to be different in 5 years and it's going to be very different in 10 years. And we're going to have to keep investing in innovation and keep evolving to stay close to the consumers.
As you look around the world, which markets do you see the fastest innovation when it comes to e-commerce? When you just sort of get on your app and you order something up, it gets delivered, for example. Is it China? Is it the United States? Is it Europe?
I actually think that places like Shanghai and some parts of Western Europe are on the cutting edge, along with some of the bits of the U.S., but really at a par. I mean, the U.S. in many respects, there's a lot of advanced e-commerce, but I can tell you it's very advanced in places like Shanghai and Western Europe as well, and the penetration of e-commerce in aggregate is even higher in some of those places than even the U.S. So, you know, when you want to learn what's going on, I would be just as tempted to tell you go to Shanghai as stay in New York.
And how do you market in that circumstance? I mean, we're used to going to a fast food restaurant, for example, and there's a Coca-Cola there. It's on the menu.
Yeah.
So let's have that Coke or that Diet Coke.
Yeah.
You don't have that when you're on your app.
No, but you have to get it. I mean, you know, if you went back even 2 or 3 years in China, for example, when a lot of the apps and the mobile payment systems came in, we weren't on the menu. Actually, even worse, we were trying to sell perhaps a returnable glass bottle to the restaurant, which had no way of being in the delivery system. So we've had to re-engineer our business system very quickly to both be present on the app. So what's the virtual representation of what you'd normally see in the store? And how do we change the packaging portfolio so that we can be part of the delivery system? And you have a lot of places in Shanghai where food ordered on apps and delivered is 30–50% of the restaurant sales.
That's the relationship with the consumer. Talk about Coca-Cola as Coca-Cola. How is technology changing the way you do business, and for that matter, your workforce?
It's changing it in lots of profound ways. I mean, in simple terms, you know, you go back 10, 20 years, we were a large company and we're one of the few that could afford to invest in expensive IT systems and do our own stuff, our own programs, our own server farms. You wind forward to today, that's no longer the model. We've had to move to the cloud. We've had to move to standard programs that whole industries use, and we had to use the mobile. The one thing I always say to the IT department is, just put it on the phone. Everything can be done on the phone. Let's just move everything to mobile on the phone. The old days of IT had training budgets. Why? Everyone knows how to use the apps on the phone. So it's profoundly changing the way that we work, and I think it's going to continue to flow through the organization. We have a big program of digitizing the company.
Does that translate into fewer employees as a practical matter because of the efficiencies from digital?
I think it for sure it changes into a different profile. I mean, people are having to adapt to doing things in a different way. We've actually made a lot of changes in our IT departments to move to a different skill set. So it's certainly changing the nature of employment and the sorts of profiles you want. Whether we buy the services ourselves or we buy the services or do it ourselves makes a difference as to where the employees are. But net, more employment's being generated in the economies.
So can Coca-Cola compete with Silicon Valley and the digital startups when you're trying to recruit the young computer scientists?
Well, Atlanta is a very fast-growing economy. The state of Georgia has been ranked, you know, top 1 or 2 of place to do business in the U.S. for many years in a row. The local political system has done a great job, so has the city. So it's a very competitive economy there, and we do very well in it. We're happy to see Atlanta and Georgia growing, and they've done a lot to invest in tech startups and the media industry in and near Atlanta, and it's being very successful.
As you look toward really substantial growth in these new beverage categories, are you looking at acquisitions? Are you looking at organic growth? I mean, you have been inclined, I believe, to look for smaller brands, startup brands, bringing them along. Is that the future path to a significant degree for Coca-Cola?
I think it's going to be both. I mean, we have grown organically, but we have made these bolt-on acquisitions, as we call them, the little small ones, the niche brands. I think where we see that something is a really good idea, we invest in them. Sometimes we buy them, sometimes we just invest with them. But there's a quid pro quo. They get the capital that we inject, yet we can introduce them to the globe, not just the country that they've launched in. And that's helped us double the number of billion-dollar brands that we sell around the world. So I think it's going to be an and strategy rather than one or the other.
It's interesting. It's a total beverage company. It's not a food company. I mean, there are some competitors who said, let's become a food company, at least in part. Why did you make that decision? And does it make you any more vulnerable, forgive me for saying, but even to acquisition? I mean, you're what, $200 billion market cap? It's a pretty big acquisition. But there are some pretty big consolidations in the food industry out there.
I think firstly, you know, we're focused on beverages because that's where the greatest synergy and the greatest application of our know-how and our fabulous global bottling distribution system is. It's the thing that can be most synergistic with what we've already got. And the market for beverages is one of the best growing markets in the whole of the supermarket or in the other stores. So it's a great market. We have a good position. We can create a lot of synergy. So it's a question of choices. I sometimes say never, which then causes confusion because people say you haven't ruled anything out. I say no, it's a question of what's most logical. And beverages are the most logical thing for us to do first because we stick to our knitting. In terms of how we think about the consolidation, in the end of the day, I'm pretty convinced that investors, gold star goes to those that grow with expanding margins. Growth is the name of the game. If the category's got no growth, then optimize the margin. Okay, but that's still silver prize largely over the long term. So I'm pretty clear. If we focus on driving top-line growth, which we believe we can.